Good morning, friends. I welcome our beloved speaker, CA Ramesh, and with me is my colleague and secretary, Abhishek Murli. This is our second live meeting and first meeting where we are going live from our own places. And this COVID lockdown adversity has given a lot of options for us to explore using technology. So we thought where knowledge has to be shared, let it be shared in whatever way we could kind of reach out members. ICS also was come with a digital learning where you can actually get structured CP credit. A small video has been put in this channel yesterday by me. Probably I'll share the text to all others later. Where if you watch the videos relating to bank audit, you're entitled 6 hours of CP credit. Nevertheless, those videos are there. We thought all the important topics of bank audit, we should have a separate session. And I'm very happy to have with us C. Ramesh sir with us. Will take us through the IRAC norms and more also on two important updates which have come. One is on these advisories issued by ICI and the RBI moratorium as to the impact which will have it on the IRAC norms. So I request Abhishek to first welcome CA Ramesh sir and then we'll go to the session. Abhishek.
Thank you, Chairman. Honorable Chairman of SIRC, Shri CA Dungarchand Jain, our esteemed speaker for the day, the respected CA Ramesh sir, who is joining us from Chennai live. As the Chairman rightly said, this is our second live program that we are doing at the SIRC, where we are webcasting it. In fact, I have to give credit to the Chairman, where as soon as this COVID lockdown came up, he immediately decided as SIRC, we have to take up the initiative of webcasting the programs and keeping our members updated. Though the ICA also have their own ICA TV portal, from SIRC being a program organizing unit, we will be doing multiple programs as such on very important topics. And we will also be taking questions towards the end of the program so that you can have live updates, live interaction with our respected speaker. And for today's program, we have CAS Ramesh. He is a person of immense respect, a regular speaker at our CA Institute, and a person with several decades of experience, especially in bank audit. In fact, he is a person who is so down to earth. We had requested him for a profile. Even 2 minutes before the program went live, the chairman and I, we requested him, sir, please share a profile. He said, no, I am not going to do all that. You just straight away come to me. You just give me my name and then you introduce me. But as a matter of formality and as a matter of respect, we'd like to thank him for taking time out of his very busy schedule and especially coordinating this entire online, how to webcast the PPT, how to webcast the whole face, and making sure there is no echo, the video is clear, the audio is clear. So thank you so much, sir, for taking time out of your busy schedule, preparing our detailed presentation and joining us here today. Just a very brief introduction. I hand over the presentation and the seminar to our esteemed speaker, CAS Ramesh. Sir, over to you.
Shri Gurubhyo Namaha, Namaskar and welcome. This presentation was prepared by me in the month of last week of Feb and first week of March. We presented in about 9 branches of SIRC. Unfortunately, after I addressed the members of 2 branches, the COVID pandemic broke out and the ICA had advised against holding any further seminars and the country went into a lockdown. However, I'm delighted to connect with all of you for this live streaming. And our thanks are due to Mr. DC Jain, the chairman of SIRC, and Mr. Abhishek Murli, the secretary, for the strenuous efforts that have gone in the last 3-4 days to make this presentation possible. I have taken into account the Reserve Bank of India circulars issued till April 1, 2020. To be more precise, the circulars affecting the IRAC norms till the 27th of March 2020. What I will be covering in this session is one, the COVID-19 regulatory package announced by RBI and whether it has any impact on the audit for the current year. 2, the concessions to the MSME sector. 3, the resolution of stressed assets. and 4, the prudential norms, which will be a quick refresher. In the prudential norms, we look at NPA norms, restructuring of advances, and project loans. We'll also look at asset classification and provisioning norms. On March 27, 2020, the Reserve Bank of India governor addressed a press conference explaining the steps taken by RBI to tide over the difficulties caused by the COVID-19 pandemic. RBI then released a press note which was entitled Statement of Development and Regulatory Policies. RBI later in the day issued a circular addressed to all banks, financial institutions, and NBFC. There is a slight difference in the language used in the press note vis-a-vis the circular. We are bound by the circular only. Please remember that we are bound only by the circular and not by the press note. Now, if we are bound by the circular, in my opinion, the RBI regulatory package has no impact whatsoever on the audit for the current year. Let us take a look at what the RBI regulatory package is all about. While the press note spoke about several things, the regulatory package circular spoke only about 2 things. One is rescheduling of payments, term loans, and working capital facilities. 2, easing of working capital financing. The press note number or the circular number, sorry, not the press note number, the circular number is displayed on top of the screen for your ready reference. Now, what does he mean? What do they mean by rescheduling of payments? Does it have any impact on the audit for the current year? And what do they mean by easing of working capital financing is what we're going to look at in the next couple of slides. Banks, financial institutions, and NBFCs have been permitted. In other words, it is something which the banks can decide on their own. But from the press, I learned that all the banks have gone in with the advice given by RBI. They have been permitted to defer the installments falling due between the 1st of March and the 31st of May 2030 for all terms. What does this effect mean? In effect, it means that the March payment due can be paid in June. The April due can be paid in July, and the May due can be paid in August. In other words, the entire repayment schedule of a term loan has been pushed back by 3 months. For example, if a term loan was to end in the month of January 2023, it will now end in April 2023. And what do they mean by when they say the payments falling due in the month of March? The payment falling due will include principal and or interest components, bullet payments, EMIs, and also credit card bills. Please note that interest shall continue to accrue during this period, during this moratorium period. This is only a shifting of the three installments of the term loan. As for the IRAC norms, in my opinion, this does not have any impact on the audit for the year 1920. Because what we are worried about is whether all the installments due has been collected till 31st of December 2019. The second aspect that we are dealing with is rescheduling of payments, working capital facility. Again, the interest that is debited to a CC account or OD account in the month of March, April, and May is deferred by 3 months. But please note, the entire interest that is debited in the month of March, April, and May is to be collected immediately after May ends. That is, in the month of June, the 3 months interest is to be completely collected. The accumulated interest will be recovered in one shot after the completion of this period. Again, this has no impact whatsoever on the audit for the year 1920. The RBI circular further goes on to say that this will not result in restructuring, and therefore there will be no downgrading of the asset. This downgrading they're talking about is something which will probably happen, something which pertains to when an account is restructured. We will look at restructuring in the later part of the presentation and what impact it will have. But in my opinion, again, this has no impact whatsoever on the audit of the current year. Credit information companies have been asked not to ensure that the borrowers are not severely impacted by this benefit that is given by the circular. We just looked at the COVID-19 regulatory package issued by RBI, and there is no impact whatsoever on the audit for the year 2019-20. But there are certain press notes and TV news where it looks as if it is a waiver. It is not a waiver. It is only a deferment of the installments. If the RBI really wants to ensure that there is absolute clarity in this, I think the RBI should come up with another circular clarifying the entire situation. Mr. Amarjit Chopra, when he spoke yesterday from the ICAI Delhi, also said that it has no impact whatsoever. And RBI should probably will come out with some more circulars on this. If and when they do come, I will note to update this presentation and maybe send a message across to all the residents of this program. Now, in the last couple of years, in the last 2 years, several circulars have been issued by RBI, which are giving concessions to the MSME sector. Let us look at what these concessions are. There are 5 circulars that I have listed on the screen. The circular 1 was issued on February 7th, 2018. Circular 2 was issued on June 6th, 2018. And circular 3 was issued on January 1st, 2019. Fourth one on February 11th, 2020. And the fifth was February 1, 2019. The first 2 circulars actually deal with the delinquency days increased. For MSME borrowers, the 90-day norm of IRAC norms was increased. But these 2 circulars do not have any relevance to this year's audit. And therefore, we will not waste any time looking at those 2 circulars. Circular number 3 and circular number 4 talks about one-time restructuring of the MSME loans without a downgrade in the asset classification. And circular number 5 talks about interest subvention for MSME loans. The interest subvention is 2% for all GST registered MSMEs on existing or incremental loans given to the MSME from 2/11/2018. Maybe the banks will ask you as a part of the audit exercise to certify the interest subvention, and that is why I thought it fit to bring this particular circular to the attention of all of you. The circular is very simple, and again, I'm not going to waste any time on that. It only says that the MSME will be given a 2% interest subvention on all loans that they enjoy and on additional loans from 2nd November 2018. Please note that the interest subvention is available only for an amount of 1 crore. If the MSME has borrowed more than 1 crore, they will not be eligible for interest subvention for amounts above 1 crore. In other words, if 2 crores is a total facility, they will enjoy an interest subvention for the first crore and not for the second crore. We will now look at those 2 circulars, circular number 3 and 4, which deal with restructuring of MSME loans. These 2 circulars are similar in wording. The only change is the date of implementation. The circulars are very clear that the banks must have a board-approved policy before any facility or any concession under the circular is extended. Normally, a standard loan, when it is restructured, will be downgraded and made substandard. Here, RBI says a standard loan to MSME may be restructured without downgrade. This is a one-time exercise. There are conditions specified for it, and those conditions are being fulfilled before the loan can be restructured. Please also note that an account which has been restructured by virtue of the circular issued on January 1st, 2019 cannot be restructured again by virtue of circular February 11, 2020. When I say it cannot be restructured, all I mean is it can be restructured, but it will have to be downgraded. In other words, the MSME loan can be restructured either by circular dated January 1, 2019 or by February 11, 2020 and cannot take the benefit of both the circulars. Now, what are the conditions that have been prescribed for the MSMEs to qualify for this restructuring? The aggregate exposure, both fund-based and non-fund-based, of banks and NBFCs should not exceed 250 million as on 1st January 2019 or January 1, 2020. Please understand that this is not talking about balance outstanding. This talks about aggregate exposure, both fund-based and non-fund-based. In other words, if an MSME has a term loan and a bank guarantee, even though they have not used the bank guarantee limit sanctioned to them will have to be added to arrive at whether they are exceeding 250 million or not. The entity should be registered with GST or should be exempt from GST. In other words, an entity which is not registered with GST is not eligible for this concession given by the circular of restructuring without downgrade in the asset classification. The third condition is the borrower should be in default, but should be a standard asset on January 1st, 2019 or January 1, 2020 as the case may be, and it should continue to be standard till the date of implementation of restructuring. I think we need to spend a little time on this particular clause. Let us take an example. There is a term loan account where all the installments till 31st December 2018 or 2019 has been paid. The interest that was debited to the term loan account in the month of December has also been serviced, which means on 1st January 2019 or 1st January 2020, the account is not in default, and therefore they will not be eligible for restructuring. In other words, to understand it simply, there must be some overdue in the account, but it should not be an NPA. There should be an overdue of at least 1 day, but it should not be more than 89 days. If it is more than 89 days, then it automatically becomes an NPA, and therefore, even if you restructure it, it will continue to be only substandard and not standard. This is a clause which we need to be very clear about this clause. In other words, to ensure that the banks have extended this concession only to the most eligible MSMEs and not to everybody blindly or mechanically. So what we need to ensure is that the aggregate exposure is not more than 25 crores. 2, the account was standard as on 1st January, but there was a default. And the third thing is the account should not slip into NPA before the implementation is over. In other words, let us say there is a default of about 40 days. Then before it slips into NPA, which is in the remaining 50 days, the restructuring should be completed. During the course of restructuring, if it slips into NPA, this concession cannot be extended. And the restructuring implementation should be completed by 31st March 2020 if it is done with reference to the first circular, or December 2020 if it is done with reference to the second circular. What do we mean by when is the implementation complete? All the documentation should be completed with all the lenders. Charges should be created perfectly. This is the main criteria for implementation being completed. And if there are new capital to be brought in by the lender, by the borrowers, all those things should also be completed and should be recorded in the books of the lenders and the books of the borrower. Puts a lot of pressure on auditors. How do we verify whether all this has been done or not? While they have allowed a restructuring, they have also said that there should be provisioning made for this restructuring. An additional provision of 5% should be made onto this restructured accounts. At the end of the specified period, banks may upgrade this to standard, subject to the account demonstrating satisfactory performance with the specified period. I hope I'm clear on this. Income recognition. There is no benefit given to the income recognition. It is only for asset classification, and interest shall not be recognized on accrual basis if overdue for more than 90 days. Now let us look at what are the checklists that we need for MS before we certify that an MSME account was eligible for the benefit given by this circular. I think the first thing that I would ask the bank to provide me is that the borrower is a genuine MSME unit. I know that most of you will say that we can calculate whether the borrower is an MSME or not, since we know the limits for an MSME account. But I don't think that is the job of the statutory auditor of the bank. It is for the bank to have done it. They should have got evidence from the borrower that he is a registered MSME unit. While there is a court case, a Delhi High Court, which has said that the unit need not be registered with MSME for enjoying benefits under the MSME Act, I would probably suggest that from the purpose of audit, we need to ensure that the borrower is an MSME unit, which means we need to ensure that they have a Udyog Aadhaar certificate or a registration certificate from the state or the central government, evidencing that the borrower is a genuine MSME unit. Now, how do I know what is the aggregate exposure of the MSME unit? All that I need in the audit of the branch which I am auditing is the audited financial statement of the borrower. The audited financial statement will only list out the balance outstanding from banks, NBFCs, or financial institutions. It will not talk about aggregate exposure. So, to that extent, I need to ensure, as an auditor of the branch, I need to ensure that the certificate from a chartered accountant which lists the aggregate exposure of the MSME unit. This is something which the banks may have missed out to have collected from the borrower and kept on the file. If it is not available, what is it that we do? I think we need to take the stand that we are not sure about aggregate exposure and therefore the MSME concession cannot be extended. The third point that we need to look at is the GST registration certificate. Is there a GST registration certificate? If so, what is the GST number? And we can also go online and check if it is still alive on the relevant date. We have heard several cases where there have been people who have obtained a GST registration and gone on to cancel it. And it is very, very simple to check whether the GST registration is still alive or not. All that we need to do is log into the GST portal, key in the GST number, and we will know the history of that party, whether they are still alive and whether they filed the relevant forms on time. This is something which we need to do as a part of our audit procedure. Check whether there were any overdues. As I told you earlier, there must be an overdue, at least by a day. If it is not there, then obviously the concession cannot be extended. Evidence for confirmation of implementation. Again, I think we need to rely on the certificate from the chartered accountant of the unit for the capital structure and for infusing any further or additional capital as we have been mentioned in the sanction letter. RBI in the month of June 2019 announced a prudential framework for resolution of stressed assets. I want you to look at the bottom half of the screen, by which you will understand that the special regulatory treatment given for resolution of stressed assets have all been withdrawn, and the latest one is the one which has been issued by RBI on June 7th, 2019. I'm not going to spend too much time on this resolution of stressed asset because the timeline given and the amount prescribed in the circular may not apply to most of us doing branch audits. In the first instance, the resolution of stressed assets will apply to all borrowings in excess of 2,000 crores from the 7th of June 2019. Now, none of us are going to do branches which have 2,000 crores, and therefore we don't need to worry too much about this circular. But I brought this circular to your attention only to tell you that the CDR scheme, the flexible structuring of existing term loans, project loans, SDR, change in ownership outside SDR, all those schemes have gone away. And therefore, we should not be blinded by what the branch says that they have resolved it or restructured it under these special categories which are available earlier but no longer available. Something which some of the branches might try to slip into us. Please let us be very, very careful. When I told you that it is applicable only for 2,000 loans above 2,000 crores, that is those are the loans for which it is applicable from June 7th, 2019. For loans which are more than 1,500 crores but less than 2,000 crores, it is applicable from 1st of January 2020. And for loans less than 1,500 crores, the date is yet to be announced. Since none of us are going to do branches which are more than 500 crores at the best, it is not something which we need to worry about. But in case you do get a branch where there is a resolution of stressed asset, please be guided with this circular. This circular also talks about SMA or special mention accounts. The classification of the SMA is as follows. For term loans, the principal or interest payment should not be the overdue between 1 and 30 days will be classified as SMA 0, 31 to 60 days will be classified as SMA 1, and 61 to 90 days will be classified as SMA 2. And what is default? Non-payment of debt when either a part of the installment or interest has become due but have not been paid. In the case of cash credit facilities, there is no SMA 0, there is only an SMA 1 for anything which has not been paid within and is overdue for a period of more than 31 days but less than 60 days, it will be SMA 1, and more than 61 days, less than 90 days will be SMA 2. These are so far what we saw was the COVID-19 regulatory package issued by RBI on 27th of March 2020 and circulars specifically for MSME borrowers issued in the last 2 years, which have an impact on the audit of this year, unlike the COVID-19 package, which has no impact on the audit of the current year. Now let us look at the prudential norms as a quick refresher. The prudential norms have been in existence for almost 3 decades now, and there are no great changes. We only need to look at more as sort of a refresher, since most of us would have, those of us who don't do concurrent audits would not be in touch with the NPA norms, and therefore our memory could have become a little dim, and that is the reason why you need to be sparked up by this refresher. As all of us know, the uniform of 90 days still continues for all loans other than agricultural loans, and for agricultural loans, it continues to be based on crop seasons. Now, what is this 90 days that we are talking about? Is it 90 days for term loans? Is it 90 days for CC accounts? Is it 90 days for demand loans? Yes. This 90 days applies for all loans other than agricultural loans. Please note, it also applies to government guaranteed loans. In a term loan, when the interest or installment of principal remain overdue for a period of more than 90 days, then the account becomes a non-performing asset. Let us take a small example. The loan was sanctioned on, let us say, the 1st of January 2019. The repayment also commences from 1st of January 2019. By 31st March 2020, 15 installments should have been paid. The repayment is for a period of 36 months, which means as of 31st March 2020, 15 installments should have been paid and the balance should only be 21 installments. Let us assume that the loan sanctioned was 36 lakhs, which means every month they are supposed to pay 1 lakh. By the 31st of March 2020, they should have paid 12 months in the year 2019 and 3 months in 2020, 15 lakhs they should have paid, and the borrower should have a balance of only 21 lakhs in the account. The interest that is debited on a monthly basis should also be paid, and therefore the theoretical balance will only be 21 lakhs. If the balance in the account is anything more than 21 lakhs, we need to find out how much is the excess. Does this excess represent the installment of January, February, and March, plus the interest debited during January, February, and March? If that is the case, then the account will still be a performing asset. But if the excess includes some amount of the installment or interest of months prior to January 1, 2020, then the account will become a non-performing asset. To put it in very simple terms, if all the installments and the interest debited till 31st of March 2020 has been paid by the borrower, the account will not become a non-performing asset. It will be a performing asset. Now let us go back to the COVID-19 package. The COVID-19 package is talking about deferment of the March installment. It does not talk about deferment of the December installment. So December installment of interest, of installment of principal and interest should have been cleared by the 31st of March 2020. If that has not been cleared, the account, in my opinion, will certainly be an NPA, irrespective of the fact that a COVID-19 package has been announced. let us be very careful. The COVID-19 package, unless RBI comes up with another circular clarifying, will not have any impact on the audit for the current year. There is a term loan which became an NPA on, let us say, the 1st of October 2019 because they had not paid more than 4 installments was due in the account and they had not paid it. So the bank on its own volition had classified it as an NPA on 1st of October 2019. In the month of February, the borrower comes and asks the bank, tells the bank that he would like to clear all the installments till December. And he does clear all the installments in December plus the interest that was payable till 31st of December 2019. After he pays this, the bank upgrades it. Is this right? In my opinion, it is wrong. If you look at this RBI Circular Master Circular Para 4.2.5, it says once an account has been downgraded and been made in NPA, it can be upgraded and made performing only if all the interest and principal are paid and there are no dues whatsoever on the date on which it is being upgraded. Now, in our example, the borrower only paid the dues till December and not till February, whatever date he came to the branch on February, let us say 10th of February. Till 10th of February, if he had cleared all the dues, only then can the asset be upgraded. I have come across several cases in branches where I have audited that the minute he clears dues up to 3 months before the date from the date on which he is settling the dues, the bank immediately upgrades the asset. This is something which we have to be very careful about. It can be upgraded only when all dues till the date on which he settles is paid off in full and there is no due whatsoever in the account. Only then can the account be upgraded. In fact, the ICAI guidance note also says this. Upgradation is allowed only if the account reaches no overdue status. This should not be misunderstood with overdues brought within 90 days. This has been mentioned in the guidance note issued by ICAI on bank audit. I hope you're all clear with the IRAC norms on term loans. Let us look at the IRAC norms on CC and OD. A CC account or overdraft account will become an NPA when it is continuously out of order for a period of more than 90 days. Now, what do we understand by continuously out of order? So we need to look at what out of order means. Out of order means when an account is in excess of the balance of the account is in excess of the limits or the drawing power for a period of 90 days, then it becomes an NPA. Let us take an example to illustrate this. The borrower is sanctioned a CC limit of 1 crore. The drawing power, let us say for the month, as per the stock statement submitted by the borrower, is about 1.3 crores. He is obviously allowed to draw either the sanction limit or the drawing power, whichever is lower. Since the sanction limit is only 1 crore, he can draw up to 1 crore. The balance in the account is 1 crore 5 lakhs, which means there is an excess in the account. Now, if this excess continues for a period of 90 days, it will be classified as a non-performing asset. Let's take the other way. Sanction limit is 1 crore. The DP is only 90 lakhs. Then it should be within 90 lakhs and cannot even go up to 1 crore. And if it is more than 90, if it exceeds 90 lakhs and it continues for a period of 90 days, the account will become an NPA. Now, this is one of the conditions for making a CC account as an NPA. The second condition is the balance is well within limits. That is, it is less than the drawing power, it is less than the sanction amount, but there are no operations in the account. There are very few operations in the account, and the credits in the account are not even sufficient to cover the interest debited during the period. There are several accounts where CC account where I have seen that the balance is less than the limit but there are no accounts at all. What is the purpose of a CC account or overdraft account? It is for working capital facility. And there is no turnover on this account, then obviously there is something wrong with the unit. There is probably an incipient sickness. And the borrower, knowing that the account is going to slip into NPA, either on his own volition or on the pressure given by the banks, will come and deposit some money at the end of every quarter, which may probably not even take care of the interest that has been debited during that quarter. In such a situation also, the account will become an NPA. So it is not enough for us to see only those accounts where the balance is in excess of the drawing power or sanction limits, but also cases where the account is less than the drawing power or sanction limit. Balance is less than the drawing power or sanction limit, because those are the cases which are chronic defaulters. The sanction limit is 10 lakhs. He is only operating around 8 lakhs, but if you look at it, he is not operating. He operated a few years back. The loan got stuck at 8 lakhs and it continues to be 8 lakhs. Some small amounts keep trickling in just to take care of some 50% or 70% of the interest debited during the year or the quarter. This is a very dangerous situation, and therefore we cannot afford to ignore those accounts which apparently seems to be all right, but are actually in reality not all right. So please take care to look at those. Let us take the example of a borrower who enjoys a CC facility and also a LC facility or a BG facility. Now, an LC has devolved or a BG has devolved on 30th of December 2019. Normally, when a BG or an LC devolves, it should be paid by the bank by debit to CC account or the OD account that he has. Now, if the CC account was already full and not wanting to make it an NPA, the branches have a policy, have a practice, I won't say a policy, have a practice of paying the BG or LC by debiting an account called devolved LC account or devolved BG account. And if that is not cleared by 31st of March, obviously not only will that become an NPA, the CC account will also become an NPA. So when you look at a CC account, please check whether the borrower also enjoys non-fund based limits and whether any of those non-fund based limits have devolved. Take a look at that account, and if that has not been cleared out, make both the accounts an NPA. I hope I have made myself clear on this. As far as bills are concerned, a bill will remain overdue for a period of more than 90 days from the date of purchase. If it is not cleared out, obviously that the bill will become an NPA. In other words, any amount due to the bank, if it is not paid within a period of 90 days, it will become an NPA. Now let us look at agricultural advances. Agricultural advances will go by what is called as crop seasons. The crop season, the crop season is normally decided by the state level bankers committee, which is there in every state. I would urge all of you to look at the websites of the state level banking committee to get a very good understanding of how it operates and what are the circulars they've issued. There is a wealth of information in these sites. And if you're doing the audit of a branch which is predominantly agriculture, I don't think you can do the audit without looking at the SLBC's circulars. So please do look at the state level bankers committee circulars. The site for Tamil Nadu is slbctn.com. For Karnataka, it is slbckarnataka.com. For Andhra, it is slbcap.nic.in. For Telangana, it is telanganaslbc.com. For Kerala, I have not been able to locate the correct website address, but I think you can try slbckerala.com. Now, this address takes you to two things. One, it takes you to Canara Bank, which is probably the lead bank, and therefore it takes you to Canara Bank, where some amount of information is available about the Kerala SLBC circulars. And two, it takes you to the industry website of Kerala government. There again, some information is available. I will continue to search whether exclusive website is available for Kerala State Level Bankers Committee, and if so, pass on the information. An agricultural advance does not follow a 90-day norm. an agricultural advance will become an NPA based on the whether it is a long duration crop or a short duration crop. What do we mean by long duration crop? A long duration crop is one where the crop season is more than 12 months. What do we mean by crop season? Crop season is the time from the date of sowing by the farmers to the date on which it is marketed and the money realized. So if the entire process of sowing the seeds, letting it grow, harvesting it, transporting it to the market, and finally converting to cash, that cycle, if that is less than 1 year, it is known as a short-term crop, and if it is more than 12 months, it is known as a long duration crop. An agricultural short-term duration crop will become an NPA if the installment of principal and or interest remains overdue for 2 crop seasons. Whereas a long-term crop, it is only 1 crop season. Let us look at some of the examples given before we understand this agricultural loan classification a little better. Now, this is a slide which gives you an idea of the Kharif season and the Rabi season in this country. The Kharif season disbursement period starts from 1st of April and ends on 30th of April, while the Rabi starts from October 31st to March 31st of the next year. The interest application for both these seasons by the banks are done on an annual basis. The interest application date is 31st of March and 30th of June. Compounding is also annual. Now, this is a table that I have picked up from the ICAI guidance note. This table is available on page 273 and 234, printed page 273 and 274 of the ICAI guidance note 2020. Please do look at it. Please read those 3 or 4 pages in the guidance note for a very clear understanding of NPA classification of agricultural advances. Normally, till about a couple of years back, there was an understanding that if it is a short-term crop and it has been if the due date was, let us say, August 2018, then it is a short-term crop and a crop of 9 months, then 2 more crop season, which is another 18 months to be added from the due date, and only after that it becomes NPA. Maharashtra State Level Banking Committee sought a clarification from RBI on this issue. And what the RBI said was, a loan should be treated as NPA immediately on completion of 2 crop seasons. 1 crop season for short and long term and 2 crop seasons for short term after the repayment date. 2 crop seasons of the due date refers to 2 consecutive crop seasons in which the farmer usually undertakes crop protection. This added a bit of confusion to the entire exercise of agricultural loan classification. Then the RBI further in that clarification they sent to the Maharashtra State Level Banking Committee also spoke about what is the crop season for each crop and what is the period of harvesting, how it should be calculated. Now, they said immediately after consecutive 2 harvest seasons, as per the cultivation pattern followed by the farmer borrower from the payment due date, the account is to be identified as an NPA. This slide gives you a clearer understanding of the whole thing. The loan disbursement date for a short-term Kharif crop is between April 15th and September 15th. The due date fixed by the bank as 31st March 2016. The short-term crop season is 1 year, and therefore 2 crop seasons will end on March 2018, and the NPA turning date will be 31st of March 2018 and not any other date. When it comes to Rabi, it is the same thing because it has been disbursed. Only thing is the one shift from March 2018 to June 2018 because the due date itself was only 30th June 2016 and not 31st March 2016. This again has been taken from page 283 of the ICAI guidance note on bank audit 2020 edition. This is for the long-term crop. June 15th to July 15th is the disbursement date for Kharif, and for Rabi it is October 15th to March 16th. The due date is fixed as 31st of March 2017. Since it was a long-term crop, one crop season, it will end on March 2018, and therefore the NPA turning date will be 31st of March 2018 for a Kharif crop, and for Rabi crop, it will be 30th of June 2018. Much as I have seen several agricultural branches, and in spite of having about 30 odd years of experience in doing bank audit, every time I go into an agricultural branch, I do get a little confused about Kharif, Rabi seasons, Kharif season, short-term crop and long-term crop. I normally carry the institute guidance note with these illustrations given by them, and along with the circulars issued by the SLBC, I begin my audit of agricultural branches. I would request all the members to go through those, if not the entire guidance note. I'm sure it's very difficult to go through the entire guidance note. It runs about 630 pages. But at least look at these 4 or 5 pages on agricultural advances before you go and do an audit of an agricultural branch. Because without this clarity, we may end up coming to wrong conclusions on the NPA rate of agricultural advances. Now, what happens when there is a calamity? When obviously when there is a calamity or a drought, the farmer is affected. Now, who decides which are the drought-prone areas and whether the farmers in those areas should be given any special concession? RBI came up with a circular on July 1st, 2015, where they say if there are natural calamities which has resulted in the borrower not being able to repay the loans on time, banks can decide on their own volition. That is, they don't have to go to RBI. On their own volition, they can decide relief measures like conversion of short-term production loan into term loan, rescheduling the repayment period, sanctioning fresh short-term loans, subject to guidelines contained in the circular. This will not amount to restructuring and will continue to be classified as standard. Again, which are the borrowers, the districts where the borrowers can be given this concession will vary from state to state. And you will have to be guided only by either the state government circular or the circular issued by the state level banking committee. If you are unable to get those two circulars, please ask the bank to give you those circulars. Every bank has a SLBC file with them. Half the time we don't see it because we don't ask for it. Unless we ask for it, we will not get the information at the branch level. Please ask the branch to give you the SLBC circulars. Much as we can search the web and get the SLBC circulars from the respective state SLBC sites, if you are unable to get it, please ask the branch to provide you the copy of every circular that has been issued by SLBC during the period of our audit. Without those circulars, do not even attempt to start the audit of the agricultural branch. Now, there are other advances, special situations. Should also have the approval of SLBC Master Circular dated July 1, 2013. I think you can ignore the reference to this particular circular because this circular has also been subsumed in the circular dated July 1, 2015, which we saw in the previous slide. My apologies for not removing it. But this, the same thing will apply. You will have to go only by what the SLBC of the particular bank, a particular state talks about. Now, apart from the balance outstanding, which decides the NPA of term loans and any other loan, there are also other situations which are not based on the balance outstanding in the particular borrower's account, which has an impact on asset classification. Let us look at what they are. Stock statement should not be more than 3 months old. Now, what do we understand by this? RBI says the drawing power fixed on a stock statement which is more than 3 months old should be taken as 0. Typically, what this means is, if the borrower submitted a stock statement on, let us say, 30th of September 2019, based on that, the bank can fix the drawing power for the month of October, November, and December. For January, it will become 0. And when the DP becomes 0 and the position is allowed to continue for another 3 months or a period of 90 days, the account will become NPA. In other words, the first thing that you need to see when you're doing the audit of CC account is whether the stock statement is at least the stock statement of September 2019 is available on the file. Please ask them for the latest stock statement. They should have that. If they don't have that, at least see whether one is available as of 31st of December 2019. If that is also not available, look at whether they have at least something as of September or October. Now, two things in this. If they don't even have for September, the account will have to be classified as NPA. During the course of your audit, the branch might say, sir, I have now got you the September audit. I don't think we need to take care of that. Because this was brought to us after we asked for it. They called up the borrower and got you the stock statement as of September. When they called up the borrower, can they not at least get the latest stock statement duly certified by an auditor? Even if that is not possible, that if they have not done that, why should we do a special favor to the branch classified as a performing asset? I think we are well within our rights to classify it as a non-performing asset. So please look at the stock statement. Give them a list of all the accounts where the stock statement is not available and ask them to search it from the file and give it to you and not obtain it from the borrower as on date. Stock statements are very important. Even if the stock statement of December is available and you're classifying the account as a performing based on the drawing per fixed on stock statement given on 30th December, it still gives you certain points for your audit. In your long-form audit report, you can mention about the borrower account saying the stock statements are not obtained on a regular basis. Question number 5 in long-form audit report deals with advances. The biggest question in long-form audit report. There are several questions asked on advances, and if you're in fact able to answer each one of those questions in question number 5, your audit will be complete. If there are cases where stock statement only in November or December, although I might not classify it as an NPA because it is still valid, the DP has been fixed based on that, I would make a special mention of those accounts in my long-form audit report, and that is what I would request all the members to do. An audit of financials is not different or is not, to be taken apart from long-form audit report. When you do an audit, you not only look for NPA, you not only look for classification, but you also look for answering all the questions in long-form audit report. It is a comprehensive one. Don't do first the balance sheet audit and then do a long-form audit report. You will not end up anywhere. So please do both simultaneously and you will be able to do a very good audit. Now, a couple of times I have come across cases where the borrower's limit has expired in the month of August 2019. When I go for an audit in April 2020 and ask them which are the limits which have expired, which have not been renewed till 31st of March 2020, bank will give me a list. And I find in that list there are accounts which expired before 30th of September 2019, but not yet renewed. These are accounts which will become an NPA. Because RBI very clearly says the regular and ad hoc limits should not be left lapsed without renewal for a period of more than 180 days. In other words, if the limits have expired before 30th September 2019 and have not been renewed till 31st of March 2020, then 180 days has been passed and the account should automatically become an NPA. The stock reply for this from the branch managers will be, sir, we have short reviewed it for 3 months, or our regional office has short reviewed it. You ask for that, they will give you a short reviewed note or a short reviewed sanction letter. Then they will give you further short reviewed sanction letter. Whether they short renew it or medium renew it or long renew it, we are not worried at all. The entire process, the final review should happen within a period of 180 days. The only exception that I will give to the bank in these kind of cases is if the renewal papers have gone on time and due to some administrative delay, instead of getting it renewed before 31st of March 2020, the sanction letter has come on, let us say the 2nd or 3rd of April when we go to the branch, I don't mind giving that concession. But please bear in mind that this concession cannot be given for regularization of an account which is NPA due to excess their account. Although auditing standards talk about, auditing practices talk about events occurring after balance sheet day, RBI is very clear. It says you are only concerned about the balance and the excess outstanding as on the last day of the year. Let me take a small example. A term loan account had installments and interest due from December, January, February, and March. It becomes an NPA. You want to classify it as an NPA. The branch has not classified as an NPA. You want to classify it as an NPA. The minute you tell that to the branch on, let us say, the 6th or 7th of April when you're doing the audit, this time, of course, it's probably 6th or 7th of May, not 6th or 7th of April. They will immediately call the borrower and he'll come with 2 installments, that is December and January, and he'll pay it on the day with the branch calls. Will that make the account a performing asset as on 31st of March 2020? No, it will not. You are only concerned about the status of the account as on 31st of March 2020 and not subsequently. So please be very, very clear that you will not do any favor to the branch manager. You will not take into account any credits in the account after the 31st of March of the year-end audit, and will be guided only by the balance outstanding as on 31st March, vis-a-vis the theoretical balance that should be there in the account to decide the NPA status. The concession is these are technical faults, like the regular or ad hoc limits not being renewed within a period of 180 days, and there you may give a concession. There also I'm using the word may. You need not, because RBI circular is very clear. The 180 days, if it has lapsed without the sanction being renewed, it can be and should be classified as a non-performing asset. The third case where it can become is there are very few credits, or just one credit in the account before the balance sheet date, just to regularize it. Please classify the account as NPA. Let us not be in a situation where the RBI asks us as to why we have not classified an account as NPA. Now let us move to income recognition. Income is to be recognized based on recovery. In other words, once an account becomes an NPA, the interest should be recognized only on recovery. Cash system of accounting kicks in. Till then, it is accrual system of accounting. But the minute an account becomes an NPA, it should be recognized only on receipt basis and not on accrual basis. In other words, an account which has been classified as NPA, the debit should stop in it. The flag should go up and the interest debit should stop. However, this is not applicable to advances against LIC policies, NIC, NSCs, IVP, KVPs, provided requisite margin is maintained. What do we mean by provided requisite margin is maintained? I, as a borrower, I have taken loan against fixed deposits. Now, the fixed deposit is not a cumulative fixed deposit, but it is a fixed deposit where the interest is credited to my SB account on a monthly basis. In such a case, requisite margin may not be available. And therefore, those are cases where you will go into the cash system of accounting and not accrual system of accounting for the purpose of interest account. That is what has also been shared in the third point. Respect of OD against deposit, where deposit multiple interest is taken as security, also interest may not be available. Let us take a small example. I have deposits worth 40 lakhs, out of which 38 lakhs are at the rate of 5%. The remaining 5 per lakh is at the rate of 7%. I go and take a loan against those deposits. Bank will give me 75%, 80%, even up to 90% they will give me. What are the interest they will charge me? They will not charge me, normally they will charge me 1% or 2% more than the rate which they pay me on fixed deposit. Now here is the case where I have multiple interest rates. I have 35 lakhs at 5% and 5 lakhs at 7%. The bank will charge me 9% for the entire loan that I have taken from them against my fixed deposits. Which means, while I get only 5% on 35 lakhs, I am paying them 9% on the loan I have taken against that 35 lakhs. A situation might arise when there will be no margin or sufficient margin will not be available in a situation like this. It is up to us to look at those cases and see whether they should be classified as NPA or not. These are cases which needs a very careful scrutiny, and if there are large loans against fixed deposit, please do spend a little time looking at those loan accounts to ensure to see whether some of them need to be classified as NPA. The branch will invariably tell you, sir, you don't have to look at these accounts at all because they are all against FDs. I would suggest you do a test check of the same before coming to your own conclusion whether the test check was sufficient or needs to be expanded and a more thorough audit needs to be done. Do not take what the branch tells you at face value. Another thing that I want to bring to your attention is the education loan and housing loans. You look at an education loan. An education loan repayment starts 1 year from the date of completion of the course or 6 months after getting a job, whichever is earlier. Let us say that the repayment should have started on the 1st of August 2019. In the file, as you are going through the education loan file of the borrower, you will find a letter from the borrower which says, sir, I just now landed a job. The salary that is being paid to me is not sufficient. I will be confirmed 4 months from now, after which the salary that I will draw will be sufficient to meet the EMI installment. So instead of August 2019, please make it January 1, 2020. You look at this and you call the branch manager or the loan officer and say, you have rescheduled this account, or restructured this account, and therefore the account should become an NPA. Immediately they will tell you, sir, we have not restructured this account, we have only rescheduled the payment. Whether they use the word reschedulement or refacement, it amounts to restructuring. And why does it amount to restructuring? Because RBI says so. Before going into the restructuring, pardon me, I think there's some issue with regard to my PowerPoint. Just give me a minute. There's only reversal of interest. Let's go back to the recognition of income. Once an account is debited, once an account is classified as an NPA, either by you or by the branch on its own volition, the interest debited during the current year, that is 2019-20, which has not been serviced, should be reversed. How do you reverse it? You reverse it by debiting the income account and crediting the borrowers. Does it stop with that? Does our responsibility stop with it? No. The unearned interest of the previous years also should be reversed or should be provided for. And it can't be reversed, it should be provided for. Due to computerization, what has happened these days is, the minute the account is classified as an NPA by the branch, the interest debit is stopped. The computer also, the system also calculates the interest that is debited from 1st of April till the date of NPA and passes the reversal entry for it. But the computer does not capture the unearned or unrealized interest of the previous year or years. It is up to us as auditors to look at it. I think we need to take a small example to understand this better. How can we have unserviced interest of the earlier years? That is the first question that comes to the mind of anybody. A couple of reasons why it can come. One, the account actually has become an NPA even in the earlier years. It has not been classified either by the branch, and maybe the auditors also did not look at it because it was a small account or a medium-sized account and it did not fall within their sample. Now, when you find that out or the branch finds it out on its own, the NPA date will not be the date on which they found out, but the actual NPA date. You have to go back, look at the NPA date and do it. The interest debited during this year will have to be reversed to the income account, and the unearned in the previous years will have to be provided for. This has to be done only through an MOC to be raised by you. There is no escape from this fact at all. The branch will tell you, sir, we have reversed the interest this year. Don't pass any MOC for the interest of the previous year, sir. Please don't listen to them. RBI has very clearly used the term previous years. It does not even say previous year. It says previous years. It has to be put for. And only you will have to go through the accounts of the earlier period and find out the unserviced interest. The branch will not be able to help you because they don't want to help you, but they will give you the statements of the previous years. From that, please find out whether the interest has been serviced or not. If it has not been serviced, please make an MOC for it. Second case where it can come. It was a performing asset as of 31st of March 2019. Till January, the installments had been paid. Only February and March installment was due. for year ended 19, and therefore, as on 31st March, it was correctly classified as a performing asset. The previous auditor also agreed with it. Now it becomes a non-performing asset, let us say, on June. April, May, June. On June, they identified because March, April, May, June, February, March, April, May have not been paid, therefore they make it an NPA in June. The system itself makes it, or the branch in its own relation makes it. Let us give them the credit. It makes it. What will the system do? The system will reverse the interest debited in April, May, and May. But what about the interest debited in February and March of the previous year? That the system will not do anything. You as auditor will have to look at it, take it, and put it in a use. So there could be cases, there will be several cases where an account which is become NPA during the current year will have or may have unserviced interest in the previous year. Why are they using the word previous years? There are some loans that are given where the gestation period is more than 5 years. For example, agricultural loan for plantation crops, where the repayment will start only from the 6th year to the 7th year. Because they have to, the entire mango grove should come into existence, and only after that the harvest starts. So all these years, the interest alone will be debited. Repayment would not have started. The repayment is starting in the 7th year. In the 8th year, it becomes an NPA. They would not even have serviced the interest in the first 3 years. So those are cases where there will be unserviced interest in the previous years, and to that extent, it is incumbent on the part of the auditor to look at those, find that out, and propose an NOC for it. RBI very clearly states that when the bank extends some concession, for whatever reason, it can be economic reason, it can be legal reason, it can be financial reason, condition of the borrower, whatever reason, if it extends a concession to a particular borrower and not to all borrowers, then that will amount to a restructuring. Am I clear on this? If the interest rate on housing loans is reduced for all the borrowers, it will not amount to restructuring. But if the interest rate is reduced for a particular borrower or the repayment schedule is extended for a particular borrower, it will amount to restructuring. The branch might call it refacing, the branch might call it reschedulement, but in our term or in my term, in the RBI's term and our term, it will amount to restructuring, and to that extent, the account should be downgraded. It should be made substandard. What is restructuring? Restructuring means modification of the terms of advances, including alteration of repayment period, repayment amount, and return cost. So, if a term loan is to be repaid in 48 installments, and they now make it 54 installments, it amounts to restructuring. They can call it refacement. As far as we are concerned, it is restructuring, and the account will have to be classified as an NPA. In a term loan account, be it housing loan or education loan or machinery term loan, if they are supposed to repay, let us say, ₹1,00,000 every month, suddenly at the request of the borrower, they say instead of ₹1,00,000, we will make it ₹75,000. Now what happens? If it is ₹1,00,000, maybe the entire loan would have been over in 48 months. Because it is 75,000 and not 1 lakh, it automatically shifts from 48 months to 57 months or 58 months or even 60 months. Therefore, that will also amount to restructuring. Rate of interest, yes. Rate of interest change also will amount to restructuring. Please again, let me reiterate, the rate of interest reduction given to all the borrowers across the board will not amount to restructuring, but given to a specific borrower or a specific group of borrowers will amount to restructuring. Once an account is classified as NPA, when can it be upgraded? RBI says it can be upgraded within a period of 1 year, after a period of 1 year of satisfactory completion of the terms and conditions of the restructured sanction. Again, I would like to spend a little time on this because I have come across several cases where the branches have upgraded an account much earlier than what they should. Let's take an example. An account was restructured on the 10th of January 2019. On 10th of January 2020, most of the branches of most banks will upgrade it, saying that there has been a satisfactory performance for 1 year. Now, what is satisfactory performance? All the installment of principal and interest should be paid as per the sanction letter. Now, the sanction letter says there is a moratorium on payment of interest and principal till June 19, and only from July 19 the repayment needs to start. The 1 year should be calculated not from 10th January 2019, the date of restructuring, but it should be sanctioned, but should be computed from the date on which the first installment of principal or interest is payable, is due. Now, if the party enjoys several facilities and there are different due dates for different facilities, the longest due date is the one you should take into consideration. In other words, in the example that they have taken, the upgradation can be done only from June 2020 and not January 2020. This is a case, this is an instance, this is something which is prevalent in all branches that I have seen. They don't go by the date of mention the sanction letter as to the date of repayment, but they go by the restructuring date, that is the sanction of the restructuring package and upgraded. Please be very careful of this. RBI circular very clearly states specified period means a period of 1 year commencing from the first payment of interest or principal, whichever is later, on the credit facility with longest period of moratorium under the terms of restructuring package. So if you come across the restructuring account, look at the restructuring sanction. Find out when is the date, find out whether there is a moratorium. Find out when is the month in which the first principal or interest is payable. And if there are different months, find out the last month. And from that, 1 year. And for that 1 year means 1 year of satisfactory completion. In other words, there should be no delay at all. Every month, whatever is due should have been paid. Even if they're not paid in 1 month and they've paid all together in the third month, it will not be satisfactory completion. Every month, the restructured borrower is expected to pay all the dues for that month. And if that continues for a period of 12 months, that will amount to satisfactory performance, and only then can it be upgraded. There's some key points on restructured account. These are all available in the board which has been circulated, or which is downloadable, sorry, not circulated. You can take a look at that. Again, I won't spend too much time on this particular slide. It talks about bank sacrifice. Whenever there's a change in repayment period or change in the interest rate, there is a fall. There is a fall in the fair value of the advance. That is, if you discount whatever the future interest plus principal the branch is expected to get over the period of the term loan and reduce it to, discount it to current value, there is an erosion in the fair value of the advance for which a provision should be made. It is not made at the branch level. To my knowledge, it is never made at the branch level. It is only made at the top level. But I think you need to be aware of this, and therefore this slide. What about project loans? Again, not an area where we need to spend too much time, because we probably will not be doing audit of branches where there are huge project loans. But there could be cases, at least some of us will be looking at project loans, and therefore this slide also gain a little importance. The date of completion and the date of commencement of commercial operation, which is called the DCCO, should be finalized, fixed, and documented before the sanction is done. The financial closure of the project and the DCCO should be clearly spelled out and should be documented. Without this documentation, the loan itself should not be sanctioned. It should be clearly documented, and only then can the loan be given. Well, so it can so happen that in most project loans, especially because they're dealing with infrastructure projects, there can be several reasons why it cannot be completed on time. The reasons are extraneous. They are not under the control of the promoters. It could be legal disputes. It could be an act of nature. For example, the COVID-19 lockdown for 21, 14, till the April 14 is almost 21 days lockdown. Projects are stuck. When a project is stuck for a natural calamity like this, doesn't mean that it is only going to get extended by 21 days. No, it may get extended by several months because this 21 days could have been very crucial. What happens in situations like this? Can the bank restructure a loan? Yes, they can. They can restructure a loan, which is a project loan infrastructure and project loan for non-infrastructure. When you restructure, do they have to downgrade it? No, they need not downgrade it. They can look at it in a different way. Which way are they going to look at it is what we're going to see in the next few slides. Now, DCCO can be deferred and the account can continue to be classified as standard. It will not be treated as restructuring, provided, in the case of infrastructure projects, the revised date of completion of the commencement of commercial operation falls within a period of 2 years from the original DCCO, and 1 year in the case of non-infrastructure projects. The account need not be considered restructured and need not be downgraded. Of course, the one condition is stated that the revised repayment period should be equal to or shorter than the original repayment terms. In other words, if the repayment term is extended, it will amount to restructuring. Let us take an example to understand this. The infrastructure project, the repayment period fixes 8 years. It should start, let us say, in some month in 2019. But because of delay, it has been extended by 2 more years. The date of completion has been extended by 2 more years. Therefore, the date of completion goes to 2020. Now, from 2020, they should get this entire money back in 8 years. Because the original sanction spoke only about 8 years. If they do that, it will not amount to restructuring. It will only be considered as postponement because of delay, extraneous factors, and therefore it need not be downgraded. But if the 8-year period itself is extended to 9 years or 10 years, then the concession given by this is not available. It will amount to restructuring, and the account will have to be classified as substandard. For this assets which are classified as standard based on this particular concession given, the standard provisioning required is 0.4%. Now, there are also cases where, for reasons beyond the control of the promoters, infrastructure projects, it can be 1 year, totally 3 years, from the DCCO, original DCCO, and non-infrastructure project by another 1 year, totally extended 2 years for this thing. There is a small error in the, if any of you have the printout of this material which you have downloaded from the website given by SARC, there is a small error in this slide. The slide, it will read, please note this benefit is not available to commercial real estate, is what will be available there to you. Please make it as now available. It is not available, it is now available to commercial real estate exposures. Because of a circular issued by RBI on February 7, 2020, my apologies for not carrying out this correction before I mailed it to SARs. So, but the provisioning for these kind of loans will be 5% and not 0.4%. In other words, a project loan where a DCCO has been fixed can be extended by 2 years or 3 years for infrastructure projects and by 1 year or 2 years for non-infrastructure projects, depending on the reason for the delay, and it can still be classified as performing, provided the conditions are met. What are the conditions? The repayment term, originally fixed, should not be extended. Now let us come to asset classification. The same thing, this is something which involves court cases, but the concept is the same. Once an account is classified as non-performing, obviously it will then be classified as substandard, doubtful, or loss. When is an account classified as substandard? When is it classified as doubtful? And when is it classified as loss is what we're going to look at in the next few slides. An account is either performing or non-performing. If it is performing, it is called standard. If it is non-performing, then there are 3 more categories: substandard, doubtful, and loss. Immediately when an account becomes non-performing, it will be classified as substandard. And it will continue to be in the category for 12 months, beyond which it will be moved to doubtful. Now, is it time bound? Does an account normally have to go up, account classified as NPA, does it have to go up, become a substandard and then become a doubtful asset? Not necessarily. On the date on which an account is classified as NPA, if you find that there has been an erosion of the value of security by more than 50%, do not allow the branch to classify it as a substandard asset, but please classify it as doubtful. Am I clear? You have found out that an account is to be classified as NPA. The branch agrees with your classification. Branches normally not agree. Let us assume the branch agrees with your classification. The date of NPA is sometime in this month, in this year 2019-20. It is not in the previous years. Now, a couple of things arise from this. One, you need to look at the interest debited during the year, not reversed. Obviously, you are going after the year it is over, therefore, it is not up in reversed. You need to pass an MOC for it. Two, interest of earlier years not serviced, if any. Again, you have to find the out and propose an MOC for it. Three, you need to look at the security. If you find that the security available is less than 50% of the loan sanction, or there is an erosion of the value of security to more than 50%, please do not classify it as substandard, classify it as doubtful. Again, to state this again, there is a security given by the borrower at the time of availing the loan, and if there is an erosion of the value of security by more than 50%, please classify it as doubtful. Do not classify it as substandard. It is an NPA, but it will not be substandard for 1 year before moving doubtful. It will move to substandard on the date on which it becomes an NPA. Am I clear on this? I hope I am clear on this. An account becomes there are also loss assets. What are loss assets? Loss assets are assets which are not collectible, identified by the Reserve Bank inspectors, the concerned auditor, by the bank itself, or by us. It can also happen that an asset becomes the loss because there is an erosion of the security value by more than 90%. What applies to substandard asset to doubtful also applies to substandard assets to NPA, to losses. An account has been classified NPA, you find that the erosion of the value of security for that particular account is more than 90%. In other words, the amount that you can realize by the sale of the security is less than 10% of the balance outstanding in the account. Then the account becomes a loss asset. It will not wait for it to go into substandard for 1 year, then move to D1, D2, D3 before it goes loss. On day one of classifying it as an NPA, it has to be classified doubtful if the erosion of this value of security is more than 90%. So let's look at this whole thing again. Account has been classified as NPA. Security available is less than 10% of the advance value. It will become, on the date of NPA, it will become a loss asset. Security is more than 10%, but less than 50%, it will go into doubtful category. Security is more than 50% or equal to the advance value, then it will be a substandard, where it will be for 12 months before it moves to doubtful category. And in doubtful category, we have D1, D2, D3. The D1, D2, D3 is only for the purpose of provisioning. All doubtful advances are doubtful. There is no distinction between them. Only for the purpose of provisioning, the RBI has introduced D1, D2, and D3. A borrower has a term loan account. He also has a CC account. Can I now say that the term loan account is NPA, but the CC account is no? I can't. It is like saying that somebody is good to return one portion of the money he borrowed from me, but he is not good to return another loan that he has taken from me. That is not possible. That is not right. RBI very clearly said asset classification should be borrower-wise and not facility-wise. So if a borrower enjoys several facilities, and even if one facility of the borrower becomes NPA, all the facility of the borrower will become NPA. What are the exceptions to this? Bills discounted under LC. If there is a bill which is discounted, which is an LC, until and unless the LC is defaulted, you need not classify it as an NPA. Mark-to-market value of a derivative contract also as an exception. Additional facility granted to a restructured NPA. The RBI very clearly says, once you give a restructured account, you will classify it as NPA, but the loan, the additional facility you are giving need not be classified as NPA and will not be classified as NPA only if there is no satisfactory performance for 1 year in the restructure account. So these are the exceptions. Apart from this, all classification will only be borrower wise and not facility wise. You are doing the audit of a branch where there is a consortium loan. What do we mean by consortium loan? A loan to a borrower given by several banks. There is a lead bank and several other banks are part of the group of banks which have lent to the borrower. You are doing the audit of a branch where there is a consortium account. Are you to be guided by the lead banker, or do you take an independent opinion on the account based on the record of recovery in the branch that you are auditing? Previously, it used to be based on what the lead banker says. Now, RBI circular very clearly states that you are not to be guided by the lead banker or members of the consortium. You will classify the account as performing or non-performing based on the record of recovery in the bank that you are auditing. So, if as per the books of the branch you are auditing, it is an NPA, please classify it as NPA. The branch will tell you, sir, it is a consortium account. All the remaining 5 banks are only classified as performing. Therefore, you must also classify it as performing. Don't be fooled by the banks. Let them say what they want to say. You will have to go by the RBI circular. RBI circular says you will decide the NPA status based on the record of recovery in the branch you are auditing. The only exception to this, I won't even say exception, the only thing where you can at times classify it as performing, even though it is the NPA as per the record of recovery, is when there is a letter from the lead banker saying that the amount that is to be paid to the branch that you are auditing has been recovered by them and will be passed on to this branch subsequently, and the letter also states the amount that will be passed on. RBI says if the lead bank just gives the letter saying that dues have been collected from the borrower and will pass on to the member banks, it's not sufficient. The lead banker should say what is the amount that will be passed on to the individual member banks. If after taking that amount into consideration, you find that the status of NPA changes to standard, you can make it standard. But you need to have a letter from the lead banker. I would in fact say you need to take a copy of the letter and make it as part of your working papers. But if there is no letter like that from the lead banker, do not, under any consideration to the branch or the branch manager, classify it as a performing asset. Consortium loans are large loans under the eye of RBI, and therefore please be extra careful of those loans. What about multi-branch financing? What do you mean by multi-branch financing? I am doing the audit of a branch where there is a borrower and he also has a sublimit in some other branch, obviously the same bank. Now, I as the auditor of the main branch will have to certify whether the account is performing or non-performing. The auditor of the branch where the sublimit is enjoyed by the borrower will be guided by my classification. He cannot come to an independent conclusion on his own and classify the account as performing or non-performing in that branch by doing a analysis of the account in the branch. It is only a sublimit. The main limit is here. And I, as the auditor of the branch where the main limit is enjoyed, I am expected to look at both the account in the main branch and the account in the sublimit branch, combine the two of them and look at whether it is performing or not. Therefore, in case where it is multi-branch financing, not multi-bank financing, but multi-branch financing, the classification of the branch where the main limit is available is the one which is applicable to all the sublimit branches. The critical thing which is mentioned there, certificate of the main branch is compulsory. If you are doing the audit of a branch which is where the borrower enjoys sublimits, please wait till the main branch audit is over before you classify the sublimit as performing or non-performing. Asset classification for advances in term deposit, NSE eligible for surrender, all these things need not be treated as NPA. But please remember, advance against gold ornaments and government securities and all other securities are not covered by the above exemption. Invariably, branches tell you that gold, sir, it is gold loan, sir, what are they for you to see? There are lots of things for an auditor to see in gold loans, especially in branches which are agricultural advances. Please look at the gold loans, do a test check, extend your test check if you're not happy with the compliances. But please don't think that gold ornaments are not advances in gold ornaments are not covered by IRAC norms. They are covered by IRAC norms. Special exemption has not been given to them. Special exemption has been given only for term deposits, NSCs, IVPs, KVPs, and life insurance policies. They need not be put at NPS, again provided sufficient margins available for the same. What about government guaranteed deposits? There are several cases where the state government and the central government guarantees loans. What about those accounts? Now, if the central government has guaranteed an account and the bank has invoked the guarantee, as long as the central government has not repudiated, which means they have not stated that they will not pay, the account need not be classified as NPA. How do I know whether the central government has repudiated or not? I am the auditor of a branch. There is an account which is guaranteed by central government. The branch manager tells me when I say, sir, this account is an NPA account. He says, sir, it is guaranteed by central government. We have invoked the bank guarantee. They have not repudiated the asset, and therefore the account should continue to be performed. How will I ever know whether the central government has repudiated or not? These are cases where I will require definitely a specific management representation letter. Who is the person competent to give me the representative? Is it the branch manager? In my opinion, no. It has to come from the head office. In fact, it has to come from the authority who sanctioned it, because they are the only people who will be aware of it. And they have to give it in writing to me that the central government has not repudiated till date, and therefore the account needs to be classified as performing. If I have that letter, I will classify it as performing. If I don't have the letter, I think I'll even make it the main point of my main audit. Due to lack of evidence, it's only oral, I am classifying as non-performing. What about cases where there has been guaranteed to the state government? RBI trusts the central government more than it trusts the state governments. It says where the guarantee is invoked and the guarantee is not paid by the state government within a period of 90 days, the account should be made an NPA. Please make it an NPA. We have looked at provisioning. We have looked at NPA norms on how to classify accounts as NPA. What are the norms for classifying an account as NPA? After classifying as NPA, how should it be classified? How should it be further classified as substandard, doubtful, or loss? We have looked at asset classification for government guaranteed accounts, and now we are going to look at provisioning. Now, whose responsibility is provisioning? Is it the responsibility of the branch? Is it the responsibility of the bank? Or is it the responsibility of the auditors? Whenever I have posed this question in the various branches where I have addressed the members, the immediate response has been, it is the responsibility of the bank, and therefore it is the responsibility of the branch. We are only auditors. It is not our responsibility. I would like to draw the attention of the members to this. This is from the master circular issued by RBI, where they very clearly state the primary responsibility for making adequate provision for any diminution of the value of loan assets, investments, or other assets is that of the bank managements and the statutory auditors. The assessment made by the inspecting officer of the RBI is furnished to the bank to assist the bank management of the statutory auditors. So please remember that the provisioning responsibility is as much ours as that of the bank, as that of the branch. Do not think that our responsibility ends with making auditing and finding out NPA. The provisioning is also a responsibility. Even though the provisioning is made at the head office as a whole, every branch prepares an NPA statement. Every branch also provides a provisioning statement. Look at the provisioning statement. Only then is your audit complete. This is the provisioning norm. For standard assets, other than restructure the accounts on a global portfolio, direct advance to agriculture and SME sector is 0.25%, commercial real estate exposure is 1%, commercial estate residential housing is 0.75%, housing loan extended at teaser rates is 2%. I would like to spend a little time. What are housing loans at teaser rate? What do you mean by teaser rate? Quite a few of the banks have come up with a product where they say, for the first 2 years of your housing loan, the interest that we will charge you is only 7%. After the end of the 2 years, the interest will go to 12% or 13% or 11%, depending on what it is for the other housing. Now, this is the ploy adopted by most banks to bring more business for themselves. In the opinion of the RBI, somebody who borrows it based on this advertisement or this scheme, RBI feels that at 7% he might be able to service the loan, but if the interest becomes 12%, he might not be in a position to service the loan. Therefore, they say if you have extended a housing loan at teaser rates, you must provide 2% for it and not the normal 0.4%. When can it become 0.4% again? It can revert to 0.4% again 1 year from the date on which the rates are reset higher rates if the account remains standard. So, if teaser loan continues for 2 years, teaser rates continue for 2 years, those 2 years will become 2%. Does it become 0.4% at the beginning of the third year? No. Third year, when it goes to 12% and he is able to meet those rates for the next 12 months and the account continues to remain standard, then only it will revert to 0.4%. Otherwise, it will be at 2%. Now, this is something which banks are expected to do in the system, but I have found several cases where they don't do this properly, this point does not come out properly. In fact, this even has a bearing on your capital adequacy. In your capital adequacy, if you see the capital adequacy portfolio, you will find housing loans, all the housing loans are bunched together and put in there as one figure. When you're doing the audit, you found that there were certain, the ledger had two folios for housing loan. One, housing loan public, teaser rates, or housing loan public and a particular scheme. They would call it whatever scheme. Now, if you find that the schemes under teaser rate, then that is the balance should be mentioned separately in the capital adequacy return because it has higher risk weightage. So look at this. As you're doing the analysis of your advanced portfolio, please note this down. As you're doing the audit of the advanced various accounts and audit, please note down these things. Look for them in the provisioning return and in the capital adequacy return. Account restructured during the current year classified as standard 5%. For account reaches the earlier years classified as standard to be increased to 5%. What about substandard assets? We looked at standard assets, now it's substandard assets. It is 15% provisioning on the total balance outstanding. You will not take into account any DIC, GC, EC, GC guarantee or any security available. In other words, if the balance outstanding is ₹1,00,000 in the account is a substandard account, 15% of that will be provided as parent doubtful debts. 15% provisioning is required. There are also cases where RBI says in a substandard account where the security available ab initio. What do we mean by ab initio? At the time of sanction, if the security that is available for the loan is less than 10% of both fund-based and non-fund-based, then the provisioning is not 15%, but it should be 25%. Let's take a small example to understand this. There is a term loan of 1 lakh, CC account of 1 lakh, and 9 lakhs of LC or PG. So I have a fund-based limit of 1 lakh, I have a non-fund-based limit of 9 lakhs. The security available for the whole thing is, let us say, 90,000. Now the security available is less than 10% of both fund-based and non-fund-based, and there at the time of sanction, and therefore when the account becomes an NPA or a substandard account, you provide 25% and not 15%. Please do not confuse this from erosion of security. Erosion of security is different. We saw it. If there is an erosion of the security by more than 50% of the loan outstanding, it will be classified as doubtful and not substandard. That is a different concept. This is a different concept. Security is available. Security available at time of sanction of 90,000 rupees. That security is still available. The account has become an NPA, but the security was less than 10% of both fund-based and non-fund-based at the time of sanction, and therefore it will not be 15% but 25%. This is as regards substandard assets. Coming to loss assets. Coming to doubtful assets. Doubtful assets, unsecured portion will be provided 100%, and secured portion it will be 25%, 40% or 100% depending on the age. And for loss assets, of course, it is 100%. For doubtful assets, let us take a small example. 5 lakhs is the balance outstanding. 3 lakhs is the security available. It is more than 50%, therefore it need not go to doubtful asset. But at the time of classification, but after 1 year in substandard, it would have come to doubtful asset. 5 lakhs is balance outstanding, 3 lakhs is the secured portion, 2 lakhs is the unsecured portion. 100% of 2 lakhs and 25, 40 or 100% of the remaining secured portion, which is 3 lakhs, will be the provisioning for doubtful asset. Am I clear? 100% of the unsecured portion plus a specified percentage of the secured portion. For loss of that, it will of course be 100%. This is a ready reckoner given to you. All you need to look at the NPA date. The state of the asset is clearly given. What will be the security that is required is given there. Once you are clear about the NPA date, you just look at it. I would only request you to look at the NPA statement and audit the NPA statement and the provision statement after looking at the NPA statement of the previous year. I normally look at this year's NPA statement only after the branch gives me the previous audited NPA statement. If you're doing the audit of a branch where the previous year it was not audited, there will still be a statement signed by the branch manager. Please ask for it. Do not start looking at this year's NPA statement without the previous year's NPA statement. If the previous year's NPA statement has been audited, well and good. If it has not been, at least have one which has been submitted to the head office by the branch manager. Why do I want this? Now, if there are 15 accounts in the previous year's NPA statement, the first thing that we look for is whether all those 15 accounts appear in this year's NPA statement. If they don't, I will ask the branch, why are they not figuring? No, it need not figure for several reasons. One, they could have been closed down, in which case I need to look whether how it has been closed down. 2, it could have been migrated to some other branch. Most banks have asset recovery branches, it could have been migrated there. So that can also happen. 3, and that's where I want to be clear about. The branch would have reset the NPA date and therefore it might not figure this, or they have upgraded it. Sorry, not reset the NPA date, they could have upgraded it. Have they upgraded it correctly? I want to see that. If they have upgraded it because some dues have been cleared but still some dues are left, please don't accept it. So we need to have the previous year's statement. Look at the previous year's statement, then look at it. And then look at this year's statement. If they have been upgraded, look at whether they have been upgraded correctly. If they've been closed out, see whether it has been closed out correctly or by a one-time settlement according to the terms of sanction or terms of reference. 3, if they've been migrated, have they been properly migrated? This is something you need to see. Second, there is an NPA date in all those cases of the previous year. Whether the same NPA dates are figuring in this year also. Now, we have known that some of the branches, some of the banks have tweaked or tampered with the NPA dates to ensure that the account remains NPA, but it continues to remain substandard and does not slip to D1, D2 or D3. This is the second reason why I will definitely want the NPA statement of the previous year. Whatever date has been given there, even if it is wrong, as long as it is given in the previous year statement and has been certified by the previous auditor, I will take that as the correct date. In fact, if you look at an NPA statement, normally the NPA dates are the end of the quarter or the end of the year. I, for one, fail to understand why an NPA date is always the end of the month, quarter, or year. NPA date can be any date in the 360 days. So look at the NPA date clearly because the NPA date has a very, very critical role in provisioning. This is the master circular on which this presentation has been based. This is the master circular. Please note that the master circular is only 2015, after which some circulars have come, which I have incorporated into my this thing, but there is no changes to the master circular after July 1, 2015. I have come to the fag end of my presentation, and I hope you enjoyed my presentation as much as I enjoyed presenting it to you. For the past few years, I have been a member of the ICAI AASB expert panel to answer queries raised by members during the course of audit. I am not sure whether the ICAI will constitute a panel for this year's audit also. Maybe the chairman of SIRC can explore having a similar panel for members from South. I am available to answer any queries from members during the course of audit I will ask the chairman to share my contact particulars with all of you. Thank you very much for a very patient hearing. Thank you.
Thank you so much, Ramesh sir. In fact, they say it is more difficult to address chartered accountants. It is all the more difficult when there are hundreds of chartered accountants. But the most difficult is to speak before a computer or your wife, which you have did that today, sir.
I hope it came out well. I don't know, I'm not too sure.
It was an excellent presentation. One query which I've been coming in the as chat box is that whether the CP credit, ICA guideline does not permit CP credit as of now for these kind of presentations. It was more focused towards the knowledge dissemination which we targeted. And we'll have some similar programs till the lockdown. Tomorrow we are having a program on simplifying work from home by CA Narasimhan. On Tuesday, 7th April, we are having a program on using Excel for bank audit by Sharan for 4 hours. In fact, one suggestion has come that after 1 hour, you should give a 10-minute break to the speaker as well as the audience, which we have kind of taken note of. And we'll take the queries, sir. If possible, I'll try to display it on the screen, which will make things easier. I will just see if that is working. 1 second, sir. Just give me a moment.
Yes.
Are you able to see it on the screen, sir?
Yes.
So it means it is a perfect account. It requires resources and info. I'm not able to understand this query.
Okay, we'll go for
I got it.
I couldn't get this line. A standard loan to MSME be received, please.
Can I read the next part of the question?
Pardon,
This is
sir?
the first part.
This is the whole part.
Okay. I understand what the query is. A standard loan the very fundamental of restructuring is once an account is restructured, it has to be downgraded. RBI has not stated whether a standard account can be restructured or substandard account can be restructured. That is left to the policy of the bank. Any account can be restructured, whether it is standard or substandard, it can be restructured. RBI only says if the standard account is restructured, it must be downgraded and made substandard. They have provided an exemption for MSME saying that a standard account can be restructured and need not be classified as NPA provided they have fulfilled those conditions. That is what it means. What do you mean by a standard account? A standard account is one where there is a default more than 1 day but less than 90 days. So any loan with there is a default or overdue between 1 day to 89 days is a standard account. Because the minute it becomes 90, it becomes a substandard account. And therefore, any account which has an overdue ranging between 1 day to 89 days is a standard account and it can be restructured. If it is restructured, it must be downgraded. But for MSME, if it is restructured, provided those conditions that I mentioned are satisfied, it need not be downgraded. Chairman, can I go to the next one?
Yes, sir.
Okay, the specific changes in your reporting compared to earlier year, in fact, last year itself it coming. Key management, key audit. If there are any key audit matters that needs to be explained. Now, are there any key audit matters to be mentioned in the branch audit report? Will depend on the branch you're auditing and how good the housekeeping and how good the records have been maintained. Normally, I don't think looking at NPA norms or prudential guideline norm by itself will become a key audit. But let us say that there are several issues with regard to the way the agricultural loans have been granted, how agricultural loans have been classified, agricultural crop loan seasons have been, interpreted with the branch. That could become a key audit. To that extent, you will have to bring that into account. Otherwise, there is no other changes in reporting. Whatever came in reporting last year, the same reporting continues.
So, in fact, there have been 450 plus viewers all the time, and there have been across the country actually. I think this comes from Bombay. What if there is a tendency of a customer to pay all the dues in the last month of financial year every year? What additional audit procedures are required?
Now, if you're going to pay all the dues in the last month of the financial year, which means you're talking about 12 months dues, then the account will automatically become an NPA. Because the fact that he has not paid April, May, June, July of that month of the year, it should have become an NPA. If the branch has continued to keep it as a standard asset, then it calls for very strict remarks in your long form audit report, also a main audit report, and this will also amount to an account which should have been classified as NPA, but because he paid all the dues in the month of March, they've upgraded it, and on the date of that, have they paid all the dues or not is something which you need to look at. Paying all the dues on the last of the financial year is not acceptable at all.
Even the bank's content on 31st March, the account has become standard. Why do you want to classify it as NPA?
No. It cannot become performance on 31st March because it will become NPA even as of July. Because then they cannot continue it. And it also very special mention in your long form audit report, even probably in your main audit report, drawing the attention of the central statutory auditors to this, if this is not only in one borrower's account, but in several borrowers' account in the branch. If the account has been upgraded on 31st March 2020, whether all the dues is paid up to 28 2020 or up to 31/3/2020, please clarify in the wake of COVID-19. Now, there is the clarification in COVID-19 package is not available for this particular query. The existing RBI circular says all dues till 31st of March 2020 should be cleared out if an account has been upgraded from NPA to performing. We have to wait for clarification from RBI. But as of now, I would rather go with the RBI master circular and not with the COVID-19 regulatory package, because the COVID-19 regulatory package is actually only easing the burden of the borrowers to pay and does not change the classification of IRAC notes.
This is an update that the presentation of what Ramesh has taken is available through the description, link in the description, which you all can make use of it. There have been many queries as to getting the PPT. So you can just click on the description link and pull away the PPT. The next question is, banks are not updating DP on monthly basis in CC accounts in their computers. What we have to do?
This definitely calls for a mention in long form audit report. First, to classify whether the account is performing or non-performing, you need to look at the DP. If they have not updated it, ask them to update it now, look at it, and then come to a conclusion whether it is performing or not. Second, the fact that they've updated it now does not make your job very less. You still have to take these accounts where it has not been updated, make a very strong comment about it in long form audit report, because the monitoring is not. The fact that they are not updating the DP register on a monthly basis amounts to non-monitoring, not proper monitoring, and calls for a very strong comment in the long form audit report. In fact, RBI time and again has been saying that the long form audit report is only having monosyllable answers, yes or no. It does not have strong comments. The quality of the long form audit report needs to be improved by all of us as members of the institute. And for this is the query which has a direct bearing on long form audit report. Please mention this in long form audit.
In some of the accounts, sanctions are made on ad hoc basis more than once without renewal. Can we treat such accounts as NPA in spite of servicing interest?
Please recall what I told you about renewal. If it has not been renewed for a period of more than 108 days from the time the sanction expired, please make it an NPA, even if the ad hoc sanction. Even if the ad hoc sanction comes to the CEO of the bank, please make it an NPA. Interest servicing is not enough. These are cases where we are making an NPA based on something called non-financial factors. They are technical factors. RBI had a very large paragraph on this in their main circular, in their master circular. They say, we understand that borrowers will have difficulty giving financial statements, they will have to give you CMA data, projections and all that. Considering all this, we are fixing 180 days. If a borrower is not able to give all the papers required by the bank within a period of 180 days, or after he gives it, the branch is taking its own sweet time to do it, then I think there's something seriously wrong with it. So let's be guided with the RBI circular and make it an NPA. In spite of the fact that it has been serviced, in spite of the fact that the installments have also been paid. But still, the CC account has not been renewed, and therefore all the facilities have not been renewed. Please make it.
Next one is coming from Madurai, sir. For loans, securities to be valued once in every 3 years, where in case of overdue for valuation, whether the security value can be taken as zero.
I don't think I would take the value as zero. I would probably ask them to do if the account is performing. I won't, or even if it's not performing, I don't think I'll take it as zero. I will probably be guided by what is the security. I will, if the security say like immovable property, I can ask the branch to give me a valuation based on the guideline values available in the portal of all the various things. If it is plant and machinery also there, then audited financials will give me an idea of the value. I don't think I'll take it as zero. I don't see when I said we need to take a very strong approach or a very strict approach with the bank. That doesn't mean that we throw everything to the winds and say, don't give them any benefit. Depends on the security, depends on the evidence available for security before I. If there are no stock statements submitted for 6 months or 1 year, and the financials have not been submitted for 2 years, the factories that are locked out, then I think I'll probably take a different stand. Otherwise, I will not take it as zero.
In some cases, in addition to the limits sanctioned by head office, the branch manages in his limits additional ad hoc limits. I mean, sanctions additional ad hoc limits at the year end to make it a standard asset. What will be your position in those cases?
Sir, once the limits have been sanctioned by somebody other than the branch manager by higher authority, an ad hoc limit also has to be sanctioned by them. It can be sanctioned by the branch manager, but it has to be approved by the higher authority. If that is not done, and it is just done to make it a standard asset, this will amount to evergreening, window dressing or evergreening. RBI frowns on this. In fact, long-form audit report has a question on: have you come across cases of evergreening? Please take a tough stand on these cases.
Despite of the fact that the branch manager is doing it within his limits.
No, within his limits is one thing, Chairman, but he is not authorized to enhance the facility sanctioned by a higher authority.
Okay.
In a CC account, he has the discretionary limit to give up to 10% of the CC limit, but he has to communicate it immediately to the higher authority. Has he communicated to the higher authority and have they confirmed? If he has not communicated, if not confirmed, then this amounts to restructure. In fact, not only this, there are several cases where we find a fresh loan has been granted to the borrower, and from that account it will come to this account.
Correct.
In it, you find that something which was in a SMA account in February end, in March it has become performing. Please look at the reports. Maybe a loan is sanctioned to him with the same branch in his name or his wife's name and given, which comes back into this account. These are all window dressing. See, one thing I want to tell all the members: we are not here to be friends with the branch manager. He is one human being whom we are going to meet only 5 to 10 days in the whole of our life. We don't have to do any favor to him. The excuses they will come up with: sir, my promotion is due, the loan officer's promotion is due, all these are extraneous to our audit. We do an audit based on the records available and based on the evidence provided. Take a tough stand. In fact, one of the biggest things that always worries me is we are not making as many MOCs as we should. As a central statutory, I have looked at something like 1,500 returns or more. The number of MOCs coming from the auditors is very, very limited. I think every branch in the country will have MOC. Just like we are having training sessions, branches also have training sessions where the top management tells the branch managers no MOC. MOC is something, something seems to be like COVID-19 for the branch managers. Please, MOCs are essential. Only then will all the ills of the branch come out. Please make this a substandard asset case. If you're in doubt, you can always discuss with the other professional colleagues, with experts in the panel counseled by ACA. Write to us. We will also tell you what we feel about it, and then, of course, finally, it's your own professional judgment. Thank you.
Sir, on this panel, we will wait for ICA to constitute one. If they are not doing it here, then we will kind of do it from SARC. And Abhishek is having a laugh, sir, because his windows are properly dressed behind, actually. The next question: branches are considering fish pond loans as agriculture loans. Then what will be the repayment consideration for NPA purpose?
Okay, I think there is a circular which talks about animal husbandry fisheries. I don't have the circular reference right away. That circular tells you about what will be how the repayment period will be fixed and what will be the NPA for it. I don't know how to pass it on to you. Maybe if this gentleman can write to my mail address, or you can forward it to me, Chairman, I will reply in that and send it to you.
Okay. The classification of advances, the value of immovable property shown in statements can't be verified in the majority of cases. How to safeguard ourselves?
You don't understand why it cannot be verified, because immovable properties, there will have been a valuation taken from the borrower, from the panel approved valuers before the loan was sanctioned. Therefore, the valuer has given you the. If there is no valuation statement, then the appraisal is wrong. There is some problem with the appraiser, and that needs to be brought into the long form audit report. But if you have to safeguard yourself, I think it is very, very clear that both the legal opinion should be available and the valuation report should be available. If they are not available, although you need not make the account an NPA, please draw specific reference of the central statutory auditors to these cases. And if they are in the borderline between NPA and performing, please mention them in your main audit report itself.
Stock statements not submitted since December 2019. Will working capital advance be classified as NPA in March 20 for not submitting the statements on time, or any relief available because of COVID-19?
Forget COVID-19 for a minute. Stock statement not submitted since December 19. So, which means I am presuming that a stock statement as of November 19 is available. Now, based on a November 19 statement, the bank can compute the drawing power for December, January, and February. March, it will become zero. The drawing power becomes zero. Therefore, the entire balance outstanding is in excess from March. That period has to continue for 90 days before it becomes an NPA. Therefore, you need not classify this as NPA. However, I think again this will form a part of your long form report.
Clarify LC default account and NPA.
Okay.
Is it?
Yeah. LC. Once an LC is default, if the borrower enjoys credit facility, I mean CC account, normally a CC account will be there if a CC, LC or BG is given. Or if it is not, if it is for an individual borrower, he need not have an LC or a BG, then they will have 100% margin. If there is 100% margin, once a LC or BG defaults, they will pay it and close it off. There will be no issues. For a business borrower, he will normally have a CC account. He need not have a terminal account. If he has LC or BG, he will also have a CC account. When a CC or an LC defaults, they have to pay by debiting the CC account. Now, what happens is the CC account is already DRIM. If they debit this, then the account will go out of order. They don't want the account to go out of order, and therefore they debit it to an account called LC default account. Now, the LC default account also should be closed within 90 days from the date it was paid. So, if it has been closed within 90 days, you have no issues. If they're doing it as a regular feature every month on month, and there are 4 LCs of default, they kept it in a separate account, it was closed within 90 days, you don't have a major account. But even in those cases, I think you need to bring it to, you need to mention it to your non-form audit report. If the account, if the LC default on, let us say that 20th of December, they put it there, or 31st of December, they pay, they put it there. It will become NPA on 1st of April. But if they debited the CC account, it will become NPA. Therefore, that is the consideration we should have to look at for this particular.
The next is by one of our council members, Naresh Gelli. What has to be done if the bankers insist us to drop the MOC to be passed?
Naresh, don't drop the MOC. I know you.
We have the opportunity asked them.
Other members, please remember one thing. You, by not passing an MOC, you are doing a favor to the manager. But if you pass the MOC, what happens to you? Nothing happens to you. You cannot be removed from the panel of the bank unless they get permission from RBI. Do you think the bank will go to RBI and say, sir, remove this audit of the panel because he is passing MOCs? As long as our conduct is good and as long as we've done a good job, there is no fear of us being removed from the panel. Yes, I understand that probably we get a smaller branch next year and therefore make less fees. Doesn't matter. I think our integrity is more important than fees. Naresh, the only thing you do is if they plead, take a tough stand. If they plead more, take a tougher stand. That's the only way. I can tell you that I have passed MOC in every branch I've worked. Even in the quarterly audits that I did when I was central statutory.
So let's make our impact big, be it a small branch or a big branch.
Yeah, it doesn't make a difference at all. You need to be firm. Provided you're convinced with your conclusions.
Vasant Raj, credit subsequent to 31st March 20 during ongoing audit towards clearance in full, default up to 31st February 20, can it be considered audit classified as NPA? Can be updated back in April.
The only thing that I would consider it is there is default on 4th of April or 5th of April due to court of audit, the entire loan has been cleared out. Default alone being clear out, you can't classify. If the entire loan been clear out, then on 31st March it is still there in the books, you don't have to classify it as NPA. This is what the RBI has stated in various interactions with them as central statutory auditors, and this is what is also conveyed with them in the circular. Do not, as auditor, I think some of the senior professionals before I served as central statutory auditors spoke to RBI about events occurring after balance sheet date. They said that's all auditing concept, very good,
So are
excellent.
you trying to say that it is strictly going by as of 31st March?
Strictly as on 31st March 2020. The only exception is if it is cleared out completely, the loan is completely cleared, no balance, zero balance, then yes.
Next is, sir, in case of plantation advance, example given by you, will the interest repayment start after the period of 5 years? They have written
Yes,
wrongly.
there are cases where it can start after 5 years. They're monitored because the entire plantation will still start yielding revenue or economic benefits to borrower only after the plantation comes into full bloom. Therefore, it can start. Moratorium is given.
Next is whether COVID-19 moratorium of EMIs amounts restructuring.
Yes, it does amount to restructuring, but because of the circular, it says although it is restructuring, it need not be done.
Will this have an impact in next year, sir? This COVID-19?
No, even next year it will not have.
Because the later part would have covered things.
It is restructuring, but it will not amount to restructuring is what they have said in the circular. Therefore, they won't have. It is only easing the burden of the borrowers. It doesn't change the IRAC norms or the role of the auditors. Having said that, I think we still have to wait for some clarification on RBI.
What treatment to be given for advance which was fully utilized and serving the interest without any transaction of turnover in the account?
I can't understand how you cannot have any transaction in the account and you still. Okay. I think I'll split this very. The advance was fully utilized. That is, what is the advance? I am assuming it is a CC account because advance fully utilized can only be a CC account.
Correct.
Serving interest on any transaction of turnover in the account. Now, how is this interest serviced? At the end of every quarter, sir, does the money come in and get into the account to service the interest? It will happen irregularly. If it happens one quarter, it's all right. If it happens regularly, you have to go back again to the RBI circular. If it says loan solitary or very few credits at the end of the year. End of the year can be interpreted at the end of the quarter also. In addition to this, you look at the borrower file and you find that there are hardly any stock statements. Even if it is a CC account, not against the stock statement, no other transaction. It is an account showing incipient sickness. In my opinion, taking a safe stand would be to mention a detailed note in the long form audit report and also classified as an NPA, taking shelter under the RBI circular that there are very few credits or only interest being serviced, which means a solitary credit.
Is the interest reversal of previous years from the date of NPA required in the case of any asset identified as loss asset during the audit and 100% provision required?
Very interesting question. If you're going to provide 100%, then it probably doesn't require, but the circular only says reversal of interest. The interest has already gone to the previous years. So to that extent, they would probably want it. But if you do that, what happens? The provisioning will come down. So the purpose, the final purpose is the same. If you're going to classify it as a loss asset and make 100% provision, I don't think you need to worry about interest reversal in the previous years.
The next one is security value means primary or collateral. I don't know what context. Primary. In majority of weaker section loans and retail business advances, there won't be any security. Still, the branch will classify as secured fully and standard asset. How can we classify them?
Change the classification. Ask them to classify it as fully unsecured. Provide for it. That doesn't mean you will make it a loss of that because the loan itself is banks are allowed to give unsecured loans. Government of India has framed several policies where unsecured loans are given. So that doesn't mean that there is going to classify it as loss asset. You have to look at it and classify it again as not fully secured. If there is some security available, to that extent the security value is put, and based on that, provision is put.
Next query comes from our past SARC chairman, Raj.
1 second, 1 second. One second. Just go back to the thing.
Old query? Yeah.
Old query. 1 second. 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 1 sec You said there won't be any security. In reality, there might not be any security, but as per the loan document papers, there are some security available. So we need to only go by
Go
that.
by that. From our past SARC chairman, what is short review?
Short review is because all the particulars that the bank has asked for has not come from the borrower, and it is already lapsed. To ensure that the account continues to be operated and to be alive, they do what is called a short review, where they only renew it for 3 months or 6 months, not even 6 months. They normally do it for 3 months. And in the sanction letter, they also say we will again review it subject to the borrower producing all these documents, and the branch also coming up with the various explanations. They would have said, why have you given them a ad hoc limit? When was this regularized? All those things. Once the head office or the regional office receives all this, we will go in for a final sanction. Till then, it is a short sanction, protecting the branch manager from going ahead with allowing operations.
Right, sir.
For
What
example,
is
let us say if the loan expires in May, financials might not be ready. The financials sometimes get ready, most often gets ready only in September, so only by October it can come. So when in May, in June, July, what they will do a review and say this review is valid till September, in which by which time the financial should come. Once the financial comes, they will do a full review.
what is in the case of borrowing under multiple banking arrangement?
Whether it is multiple banking consortium, the concept is the same. You will classify an account as performing or non-performing based on the record of recovery in the bank that you are auditing. You look at the borrower's account statement in your branch. Is it proper? Is it an NPA? Is it a standard? That's what you will do. You know, multiple banking is an arrangement where I give them permission to borrow from another bank, that bank gives permission to borrow from third bank, and we all exchange information between us. That is all. If the borrower chooses to, side with one branch more to the detriment of the other two branches and puts in all his revenue collection into that branch to keep it performing, and the money doesn't come into the branch where I am auditing, and because of that it becomes an NPA, it will be an NPA. It has to be classified as an NPA.
It comes from Madurai. Can a person have multi-branch account in the CBS environment?
Yeah, definitely. For example, most companies have their main limit in the head office. For example, a large corporation Reliance might have their main account in Bombay. They have industries or their factories all over the country. They will have sublimits in those the bank branch in the place where the factory is located. It can definitely happen. It definitely happens. Multi-branch accounting will happen only in a CBS. Happens even better in the CBS environment.
CBS environment. Clarify, one of the consortium classify account as NPA. Can other members treat as performing asset?
No. If the other members, it is all right, it is standard as per the norm, prudential guidelines itself, it will be standard. If it is NPA as per prudential guidelines, it will be. You have to go again and again with this. I am stating the same thing. You will be guided only by the content of the account in the branch you are auditing. There are 7 members in the consortium. Two of them can classify as performing, 5 can classify as non-performing. All of them can classify as performing, all of them classify as non-performing. Any kind of combination is possible. Only thing that we need to be careful with auditors is, am I doing a proper classification based on the account available in the branch that I am auditing? That's what we are not worried about what classification that branch. In fact, we don't even have to ask the branch manager how are the other members classified. Not required. It's neither audit evidence, not required for the purpose of audit.
Next is again for a council member. Explain the importance of documentation in bank audit as it will be an important file in case of peer review. You can touch upon it.
You asked me to go into a full session on this, but let me talk about the importance of documentation. In fact, if chairman wants, we'll probably have a session on documentation. There are lots of speakers available who have already prepared this along with me to present in some other branches. We can ask one of those speakers to do this on documentation, long form audit report and documentation or something like that.
Correct.
Documentation is very, very important. Not only in the case for the purpose of peer review. If tomorrow, God forbid, RBI does the inspection of the branch and they come up with, let us say, 50 cases or 5 cases of NPA which have not been classified as NPA by the branch, and we have also not classified it as NPA in our MOC, only our working papers can come to our rescue. You need to have working papers. Now, there are cases where we see something on screen. Please take a screenshot. Even if it's not printed out, please take a screenshot in software, in soft copy. Keep it. You need to have a working paper which lists very clearly what are the total advances of the branch, how many accounts were there in each facility, what is the sample that you chose, what conclusion did you come to from the sample, and based on that conclusion, did you do an extensive audit, and what are the conclusions you came to in case of performing, non-performing, and also the comments that you make in your long-form audit. Now, please remember that there are certain accounts that you will see 100%. Any account which has a balance outstanding more than 5% of the total advance of the branch is a large advance, or 2 crores, whichever is less, is a large advance to be seen 100%. So if you are doing the audit of a branch which is, let us say, 120 crores, 5% of that is definitely more than 2 crores, therefore 2 crores becomes the limit. And there are 20 accounts with 2 crores balance outstanding more than 2 crores. You have to look at those 20. There's no walking away from the fact. You can't take a sample of those 22 accounts and do it. You have to do 100% verification of all those large accounts. They're called large accounts. I normally have a documentation, one single sheet for each of these 22 accounts. A single sheet which captures the entire gamut of that borrower, right from the date of sanction, who sanctioned it, what is the amount of sanction, insurance, primary security, secondary security, charge screen, all in one sheet. And then I have additional sheets attached to it in which we write audit notes as we glance through the audit file. This is very, very important. If you are classifying an account as performing or non-performing, please have proper documentation for it. The branch manager need not agree with your classification of non-performing. He has enough space most of the banks have enough space in the NPA statement for the branch manager to write his comments. He need not agree with us in the MOC. You tell him if he doesn't agree, let him put his objections for the central auditor and the head office to consider. Please put it. In fact, to draw a reference to NPA and working notes, when we were doing the consolidation of a region, a central statutory auditor, we had a report coming in from a branch auditor who listed about 10 to 12 agricultural advances as non-performing. And if he had left it at that, it would have been different story. He also further went on to say in the audit report that there are several more accounts like this, but due to positive, I am not listing it here. He put himself in trouble, he put us in trouble. We had to literally almost do a re-audit of the branch along with the officials from the regional office and list out several more accounts. I think if I remember right, we listed nearly 152 accounts as non-performing. Please don't make that mistake. Have your working papers. If you think an account is NPA, you have to, paucity of time cannot be an excuse. Low fees cannot be an excuse for quality work. You cannot walk away from your responsibility. If it takes 2 days more time than the deadline given with the bank, so be it. Heavens will not fall down. To quote Mr. Amarjit Chopra, the past president of the institute, heavens will not fall. In fact, I don't think I have ever completed a branch in the time allotted. I have always taken a day or two more. Heavens have not fallen. I have not been removed from the list. As long as you have a valid reason as to why it takes more time, yes, there will be pressure. Especially the last 2-3 days, everybody from the regional office will call you. Please tell them, I want one more day because there are issues. If there are no issues, of course, there's no point in delaying it. Please finish it.
A small feedback, sir, that your end of the sentence was not audible. So maybe we'll request next time.
Half the time my lips went dry. I'm sorry. I'll make a note of this and ensure that.
Yeah, give a break and you should carry water to take care of this dehydration. Sir, you are telling interest will be charged at higher rate of FD to entire loan. However, banks will fix the limit for each FD and rate will be based on that FD.
No, when you're doing a consolidation of the FDs and taking a common loan against the FD, the banks don't do that. If I have taken a loan again, the example I've given, if I've taken a loan on 5 lakhs once and then go for the way and return, there's 2 different loans. That time, what you say happened. But if I'm consolidating all the FDs and taking one OD account, let's say I want a overdraft against my fixed deposit. So they combine all that and give me one overdraft. The interest they will charge will be 2% or 1% more than the highest interest bearing fixed deposit.
I think I missed it 1 second, sir. I'm just coming back. If there is a letter from the lead bank dated previous year confirming the passing on the credit, showing no passing of credits made in the period of audit, can we classify as substandard?
That's why I think you talk about a consortium loan where last year it was not classified as substandard because there was a letter from the lead bank confirming the passing on the credit, but the money never came. Now, you can definitely classify it as substandard, but without money coming from the lead bank, were there other receipt which came into the account to make it performing is something which we need to look at. But if there is a letter from the lead bank confirming the passage of the credit on a particular date and does not come in, I think you need to look at that file a little more carefully. Why will the lead bank give you a letter and then go back on it? So that is something which you need to, maybe there is some serious issue with the banker, with the account and with the consortium members. So I think you need to look at it. But you're right. If the money has not come in and no further money has come in, it will definitely become an NPA. But subject to the fact that the money has not come in, but the borrower in his own relation from genuine sources has brought in some other money, or from proceeds, sale proceeds, he has pumped in money into the account, and because of that, the account remains becomes performing as at the end of the year issued with the audit. I think it is only fair that it should be classified as a performing asset.
What is meant by teaser rates in housing loans?
Teaser rate is a rate which is lower than the normal rate charged to capture business for the bank. Let us assume that the housing loan is normal housing loan rate is 11% for all borrowers. I, as a bank chief executive, say I want to increase my housing loan portfolio from X crores to Y crores. How do I get new business? So I go to the market saying, while all the other banks are charging you 11%, I will only charge you 9%. And on top of the 9%, there will be a small asterisk. If you read what is given below the asterisk, it will say interest income will be set to normal rates 2 years from now. So at the end of 2 years, it will not be 9%, it will become 9%. That is what is called teaser rates.
In fact, there have been a lot of positive comments for you, for the speaker, who can later go inside the YouTube and view it. Next query is, any specific or extra verification to be done for invoked foreign LCs, unlike domestic LCs? If so found, what about process of provisioning?
I'm glad somebody asked about LCs and I think most of the time we as auditors have missed out on looking at non-fund based facility. But the biggest scandal that hit Punjab National Bank was on non-fund based facility. So I think we need to look at the bank guarantees issued and the LCs issued. Invariably, it so happened that they will give you a long statement of bank guarantees and LCs on the last day of our audit, and we also sign it without saying blindly. We do sign it blindly. Please look at bank guarantees issued. Please look at LCs issued. There are also cases you will find in the bank guarantee statement that lots of bank guarantees have expired, but they have not been reversed. In fact, that is the case where if you pass an MOC, the bank should actually be happy because there is a positive effect on capital adequacy. Even further, the branch manager will tell you, please don't pass MOC because he does not understand capital adequacy. The minute you say MOC, he will go into trembles and shudders. Please do it. Now, coming to the specific questions from Mr. Madhava. He says, any specific extra verification to be done for invoked foreign LC, unlike domestic LCs? If so found, no. There is no extra provisioning, extra verification. An LC has been invoked. Once it has been invoked, there's actually nothing for you to look at in terms of documentation. It has been invoked, it has been paid, it has been debited to an account. Whether it is foreign LC or domestic LC, the amount payable is the amount that has been paid. There is going to be no foreign exchange fluctuation effect on it as on 31st March. If on the day on which a foreign LC of let's say $100,000 was invoked, on that day, whatever the exchange rate prevailing, that day it would have been converted and paid, and an INR amount would have been debited. If it is domestic LC, also it is the same thing. On that day, if it is 1 crore, 1 crore will be debited. That is the amount which has to come from the borrower. The process of provisioning will be whether it is a substandard asset, doubtful asset, or losses.
The next query is on UDN. Do we need to generate 2 UDNs, one for branch audit report and one for tax audit? I think yes. Going the the applicability of UDN, 2 UDNs now will have to be generated, one for the report and one for the tax audit report. And I think then certificates also will be there, which also requires the UDN.
Right.
3 or it will be limited to 2, sir?
I think it is 3.
3 now, yes, because Branch audit report is separate.
The
Audit report
FAQ,
certificate.
FAQ on this dividend, it says 3.
Fine. So something people say wash hands and good presentation is the comment which has come. If substandard account has been restructured, then will it be downgrade to DA1?
No. A substandard account will remain in substandard, even if it is restructured.
Is there any change in the independent auditor's report? Somebody's asking.
No.
Chetan Chowdhury. In respect of OD, as per audited financial available, the borrower is having current ratio of less than 1. Can it be flagged as siphoning of funds requiring reporting?
Yes, you can. You need to look at it. In fact, when you talk about audited financials available, there is one more point that I would like to bring to the attention of the members. Stock statement was given for 31st of March 2019, in which the stock figure is X. The financials are handed over to the branch in the month of September 2019, where the stock figure shown in the financial statement is not X, but something less than X. I always love to look at a situation like this. I asked the branch manager, have you looked at this? You would never have looked into it. The difference between the stock statement figure of given in the figure, the stock figure given in the stock statement and the stock figure in the balance sheet. Now, if that is not monitoring, what is monitoring? As monitoring, are they not expected to look at it and call for an explanation from the borrower? If the difference is, let us say, 2% or 3% or within 5%, maybe there is a genuine reason. Maybe there is some obsolete stock which they showed in March. During the course of audit, they decided to make a provision for it or write it off, whatever reason. But if the difference is more than 5% or a huge difference, I think the DP itself changes. So the minute DP changes, maybe the account will go out of performing to non-performing. It's an area which we need to look at, which we also don't look at. Branch manager also doesn't look at. I think we need to look at it. Coming to this specific question, the RBI is not only looking for reporting on frauds that have taken place. RBI is also looking for potential red flags. If these are red flags, by current ratio being less than 1 by itself need not amount to siphoning of funds. But if your detailed analysis of the financials along vis-a-vis all the other documents available in the credit file, if you come to the conclusion that it is funds siphoning of funds, run through the account in the ledger of the bank also will give you an idea about fund siphoning off. Then I think you definitely need to make a comment about the non-performing report and draw the attention of the central statutory auditors to also to this.
VK Subramani, loan account is NPA in earlier year but not classified, and I classify now as NPA. How to report unrealized interest of earlier year?
First, take these statements of the earlier years. Find out whether the interest has been served or not. When I say the interest is served or not, I'll give you an example in a CC account. If your interest is debited, after the interest debit, there is some credit coming in, which is enough to cover the interest. Obviously, the interest has been searched. Because any credit in an account is first taken towards penal interest, current interest, and then only to principal. So that is the normal allocation process. Therefore, it is served. If there is no credits after that, or by debit of the interest, the account is in excess and never came down to below limit, it has not been serviced. So take all that, find out this is the amount of interest reversed, interest unrealized, and then report the account. If it runs for 2-3 years, because you should have been classified as NPA for 2-3 years before, and now only you are classifying it, yes, you still have to do it. Only thing is, you will not classify it as substandard, you will classify it as D1 or D2 or D3, depending on the age of the NPA, depending on the date of NPA. But I can assure you that this is the task that only you can do and you will do, because branch will not be interested and can find your liquidity. I will give you printout of the loan statement of all the facilities it enjoys for all the years from the date of NPA, from the date on which you want to classify the NPA, look at it. No choice. It is a hazardous task, it is a time-consuming task, but there is no choice.
When strict conditions are not met and refunds are requested, banks refuse to return without approval from RBI. But export norms are defeated, raising suspicion. What provisioning is to be done?
If conditions are not met and refunds are requested, banks refuse to refund without approval from RBI, but export norms are defeated. I'm not really able to understand this question. Then SWIFT conditions are not met. Why are SWIFT conditions not met? By SWIFT conditions, I assume that you're talking about the condition that was given in the, which was set out in the LC or BG. LC, okay? And refunds are requested. Refunds are requested from whom? I'm not sure
Maybe
whether
the queries.
you would understand. But Chairman, I know this gentleman. I'll talk to him and find out what the query is. And
Please clarify NLRM, SHG advances, IRAC norms. NLRM.
self-help group advances will go by the same IRAC norms as any other advance. We're talking about a specific loan given to self-help groups. It will go by the same classification of 90 days. There's no other thing for it. There's no special category.
Okay. Next one, whether bank circular can override.
Never can bank circular override RBI directions in a less compliance and not at all possible. RBI is the regulator. If RBI says in 90 days, bank cannot issue a circular saying it is 120 days. Not possible at all. We are doing the audit only as per the regulator, not as per the surplus of the bank. If the internal surplus of the bank can override RBI surplus, then audit is not required. Please. That's why I always say, please read the master circular of RBI, not the internal circulars of the bank. The internal closing circular of the bank you read for the purpose of understanding the working of the bank and how they are going to pass the entry. But as far as provisioning, as far as asset classification, income recognition, and provisioning is concerned, RBI's master circular is our Bible, nothing else.
Can you share some insights in sample selection of advance accounts and NPA accounts? Which area samples have to be compulsorily 100%?
As I told you, large advances, 100%. By large advance, I'll repeat it again, it is 5% of the total advance of the branch or 2 crores, whichever is less. So if you're auditing anything which is more than 40 crores, 2 crores becomes less. So any loan account more than 2 crores will be a large advance, you have to do 100%. Sample selection of other advances will again depend on the housekeeping of the branch. I would probably do a lesser sample of, let us say, a loan against fixed deposits, loans against NSCs. I will do a larger sample of loan against housing loans and education loans, especially if I find that the documents are not very good, the sanction has been done without any application of mine, the loan has been disbursed without proper monitoring of the completion stages of completion of housing loan, then I'll probably go into looking into it into those accounts a little more. So the sample size will depend on the size of the branch, the size, the work ethics of the branch, the way their files are maintained, and it is purely a professional judgment. But I don't think you can afford to ignore any loan, in fact, any line item in the balance sheet from audit, especially in advances. If there is a breakup of, let us say, 20 or 30 facilities that is given, I don't think you can afford to ignore any of the loan facility. Every loan facility has to have a small sample. That sample selection can be enhanced if you feel that there are other reasons for enhancing sample. As far as the NPA accounts are concerned, there are only 2 things you need to look at. You don't have to look at anything else other than this. An account has already been classified as NPA. So what do you need to look at? You need to look at the operational account this year. You need to look at the security. You need to look at the NPA date from the previous year's NPA account. As far as the NPA statement, NPA return, and NPA account audit is concerned, I don't think I'll go by a sample. I'll go by 100%. There's no sample in NPA account. Unless you have something like 1,000 NPA accounts of branch, then God help you. You need to just put in more time there and do it. Otherwise, there's no other choice. Even if there are 100 accounts or 1,000 accounts, NPA accounts, small accounts, one thing that I would like to look at is what was the balance outstanding last year, what is the date of NPA in the last statement. Has it been reflected correctly this year? If the balance has increased, why has it increased? I will go into the ledger and look at it. Because they are not supposed to debit any interest. So why is it the interest coming in from? If the balance has come down, has money come in? These things we have to, there's no sampling basis here, you have to do it 100%.
In loans limit exceeding rupees 10 lakhs, audit report to be obtained as per earlier rules, whether there is any change in the rules of RBI.
There is no change, it still has to be done. I think only the limit has been increased from 10 lakhs to 20 lakhs. Let me check that out and get back to you.
Insurance renewal coverage has not been on stock at factory due to COVID-19. Any qualification in the audit report?
I think this morning, I read a piece in one of the papers that Mrs. Nirmala Sitharaman, the finance minister of the country, has said any insurance which has expired during this period from the lockdown till the 14th of April can be renewed anytime up to 21st of April. I think that answers your question. Just because it is expired doesn't mean the coverage is not available. It is automatically extended by the finance minister.
We have an update from our Honorable Central Council member CA Prasanna Kumar that ICA head office has expert panels for bank audit. So we would like to see that all the queries are posted to them and those get taken care there. So thank you so much for the update, and we are able to tell to all the viewers also. I think this is a repetitive question. Now the documents are all preserved at one loan processing cell. If we ask for documents, they take 3 or 4 days. No time given to finalize the audits.
What I do is I normally give them a list of documents that I require, and I tell them, let's go to the processing center, loan processing. I don't ask them to bring it. In fact, it's also not safe to ask them to bring it here at all, because these are very precious documents. The best is for you to go there to that loan processing center. Yes, time given is insufficient. This is something which we've been talking right from the days of Adam and Eve. The time given by banks to do an audit is not sufficient. But as professionals, we have to rise up to the challenge. And as I told you, I don't think anything will happen if you delay it by a day or two due to genuine reasons. If you think that even taking to a day or two is not sufficient to do the audit, I don't think we should take up the audit. Probably we don't have enough team, and therefore we don't take up the audit. But we have to find ways and means of finishing it. There is no other choice. To again repeat the same thing, paucity of time cannot be an excuse for doing a bad audit or a quality audit.
Since primary securities standing crops for agri crop loans, on the date of becoming NP of crop loan, whether substandard doubtful to be followed, or we can straight away make it to 100%.
No, it will become only a substandard, sir. Most cases, the larger loan, agricultural loans, even the land document will be with the bank. Therefore, it need not be made need not be made doubtful of loss. Please make it substandard and do the provisioning.
How many times short reviews can be done? Can short review be done and keep the account as standard beyond 6 months from due date? You said 3 months.
Yeah, short review can be done any number of times within a period of 180 days from the date on which it expired. If they want to do a short review every day, it is their prerogative. I have nothing to say about it. All I want to say is, RBI says you have to have final sanction, final review within 180 days from the date on which the limits expire. So if that has not been done, that becomes the need.
In case of self-help group loans, assuming 2 out of 10 of a group gone bad and branch splits the group into 2, one group of 8 and another group of 2, will the entire group of 10 become NPA?
I think normally self-help groups are treated as only one group. I'm not sure how they treat in 2 groups. Self-help groups, when at the time of lending, if it is self-help group containing 10 members, it will continue to be only one group. It cannot become 2 groups. Maybe this is the case. I'm not sure. But maybe this is the case where they were trying to make only part of it as NPA and other as standard. That will amount to evergreening or dubious methods of keeping it right. Please look into it more thoroughly and take a call. Or if you can send more details on how they did this, then we can probably give you a better answer or better reason.
In case of online audit reports, due to space limitation, how can we report our complete observations if we want to? Is audit report binding on us provided by the bank? There are software glitches where you are not able to key a lot of words.
I think then only one thing you will probably state is either an annexure audit report or say please refer this, give that to them in a printed copy to the branch managers and to the other officials of the bank, and get an acknowledgement you will give to them. Please put in bold letters in the main audit report that you have an annexure to the audit report so that the self-assessed auditors are aware of it. Mark a copy of the annexure also to the self-assessed auditors.
So somebody suggesting to take water and tea, sir. You can take water from your home
Thank
and
you.
tea
Thank
water
you
from
for
your home. You send the bill to SARC, will take care of reimbursement. Sir, in fact, we are almost able to kind of take care of the major queries. Thanks to the lockdown, which otherwise on a normal day we would not have taken so many queries. Few we are closing now because we have run ahead of 40 more minutes from the scheduled time. But sir, thank you so much. Before we conclude, a small disclaimer that these are all the views of the expert CA Ramesh and not of the institute or SARC or any of its committees. And I request Abhishek to give a well-deserved vote of thanks for an excellent day. On any other day, generally we as organizers are doing other things, but today we were able to kind of listen to the speaker. I always tell as organizers we are temples priests very near to God, but we don't take any benefit. Today we were actually able to take a lot of benefits from your session, sir. Thank you so much. We had a lovely session.
Thank you,
Before
Chairman.
you
Thank
start,
you.
Abhishek, before you start, to all the viewers, stay home, stay safe.
Thank you, Ramesh sir. Firstly, I have the privilege of proposing the vote of thanks for this online session that our webcast of from our SIRC, the CA Institute. I'd like to thank our honorable dynamic chairman, CA Dungarchand Jain, who is live from Madurai now, our speaker for the day, CAS Ramesh, who delivered a spellbinding presentation. Really, as the chairman rightly said, we had an average of around 500 people all the time who were watching the program, and there are many people who are coming and going out. So I am sure if you see the presentation as well, more than 1,000 people would have tuned in live, and I'm sure the recorded program also will be viewed by many more. So really, this is hats off, feather off for our chairman and of course our SIRC team and the wonderful speaker for the day, CAS Ramesh, who always delivers whenever we call upon him, be it at our SIRC or at the branch level. And as the chairman rightly said, it was a program which was scheduled for maybe 1.5 hours to 2 hours, but questions are still being asked, and our speaker has very lucidly delivered wonderful answers for more than 40 minutes beyond the session time, the scheduled time. It's a real wonderful program. I am sure going forward we'll have more programs. Ramesh sir, we will take your support for this going forward. And with this brief vote of thanks, I'd like to conclude the session. I once again thank our chairman, C.A. Dungarchand Jain, and all the people who have logged in from across India, actually, not just our southern region, but across India for this excellent program. Thank you very much. All the best. Thank you.
Thank you.
Thank you, all of you. Thank you.